in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
knows everything you won't admit. And action. This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What if everyone is a girl? Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms, and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad, and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where's the rest of your skirt, huh? I teach you like this to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Microsoft or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, etc. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things?
Well, I don't think that profitability and culture are their issue. The company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like me?
Crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
HD2 Brookline, Boston, WNBP Newburyport, KNEW Oakland, KOSF 103.7 FM HD2 San Francisco, and Sirius XM Satellite Radio Channel 119. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube, it is Thursday, October 1st, 2020, first day of the final quarter of 2020.
I think we're all ready for the 2020 to be over.
I was ready 6 months ago, baby.
Yeah, I know you were. I know you were. We all were. But a lot going on. Politics and policy, once again, both, I would say, the two front burners, as it were.
Yeah, well said. Listen, we're talking layoffs, we're talking jobless claims, we're talking that closely watched monthly jobs report. We get that tomorrow. So we are definitely focusing on the employment side of everything. We've got this incredible group of CEOs and leaders to talk about just that, Jason.
We're going to talk about all of that and much more. Catch up on that jobless claims report with Michael McKee in just a minute. But first, let's get a sense of the trade. It's a positive one, at least so far. Charlie Pelt's got the details. Hey, Charlie.
And here's what's going on. Just as you guys came on the air, the Dow dipped lower, now looking at a 52-point drop in the Dow Jones Industrial Average, down 0.2%. Let me give you the numbers. We'll give you the story behind the numbers in a moment. The S&P holding on to a 6-point gain right now, up by 0.2%. NASDAQ up 122 points, up 1.1%, but the Dow now lower by 34 points. Equities, for the most part, pushing higher. The dollar slipping amid conflicting signals on chances for a fresh fiscal stimulus package out of Washington. Oil is tumbling today on concern that the market may be oversupplied. West Texas Intermediate now down 4.1%, 38.58 a barrel. Gold up 1.2%, 19.08. 10-year up 2/32. 10-year yield 0.67%. Again, recapping, the Dow lower. Stocks mixed. S&P higher by 4, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
So there you have it, a little bit of a mixed trade there as we get into the final couple hours of trading. Let's set the Business Week agenda, figure out what some of the economic data may be that's driving this, politics and policy. He's all about it. Michael McKee, International Economics and Policy Correspondent for Bloomberg, joining us on the phone from New York City. All right, Michael, so we saw those jobless claims numbers come out this morning. What do they tell us? Synthesize it for us, especially as we head into Jobs Day tomorrow.
Well, I want to be very 2020 since you brought it up about this and tell you and say they don't maybe tell us as much as we think.
Yeah.
The number of jobless claims went down by about 36,000 on the headline number to 837,000. But that number is affected by a methodological change the Department of Labor made about a month ago. The total number of claims went down by 40,000, the non-seasonally adjusted number to 787,000. But that number may be distorted because we may be getting all kinds of different things being put into the data, like fraud, double counting, things like that. California paused its unemployment insurance program for 2 weeks in order to try to work out a lot of the problems that they have been having. But they had to put in something. So they used last week's numbers, which were 262,000 in California alone. If that is correct, then you got 837,000. If it's not, it could be 600,000 or it could be 1 million. So it's kind of hard to get a completely accurate picture. The only thing we can say is that it's still very high, and there's still a lot of people who don't have jobs.
Just another thing that's screwed up in 2020, Michael McKee.
Oh, yeah.
Oh, yeah. Hey, what about tomorrow's monthly jobs report? Because we've got a bunch of CEOs. We're going to hear from Brian Moynihan. We know Wall Street layoffs we continue to see. We got those Disney layoffs this week, the airlines. I mean, man, it just doesn't feel good. I know tomorrow's report is backward looking, but what's key about it, Mike?
Well, I think the thing that we're going to watch for the most is the change in the number of people who are laid off expecting to go back to work and the people who are laid off with no expectation that they will go back, permanent job losers, they call them, because that's where we are now with the economy transitioning from the rebound that we saw, people going back to work as states reopened, to now people going back and finding their companies either have gone out of business or can't maintain the staffing that they had because they don't need the people that they needed before this pandemic. Disney's a good example. With Disneyland closed, they don't need any employees.
Yeah.
So you're going to see, and the airlines, of course, nobody's flying, so they don't need as many people. The interesting thing is we could say the same thing about the jobs report tomorrow that I just said about the jobless claims and that you guys were talking about, how very 2020. We're going to get the consensus is for 867,000 jobs. That's more than we had in any month since the great financial crisis. And Wall Street will see that as a disappointment because it's falling backwards. So how very 2020 everything is right now.
Yeah, well, and speaking of falling backwards, Mike, I do wonder what folks are telling you, especially economists are telling you in terms of the modeling, in terms of the predictions around this second wave and a resurgence of the virus. I mean, I think it's safe to say, I don't want to speak for you, but I would imagine that a lot of us are nervous about what's going on, especially here in the tri-state area.
Yeah, there's a lot of nervousness about it because we're seeing a rise now, of course, in the tri-state area. They're saying it's confined to a few zip codes, but it's really kind of the same thing is happening in many states around the nation. We're not seeing spikes like we saw in Texas and Arizona earlier, but just a general rise. And doctors have already been concerned about now that everybody's back inside with schools and we're going to be inside because it's cold and the flu season starts, that we're going to have this new wave. So far, we can't say it's affecting the economic data, but it's out there, and it's maybe sort of like you've got a weather service forecast for a hurricane, but it's beyond the horizon. Right. You can't see it yet, and that's what people are nervous about. And like hurricanes can disappear too; they can just break apart. So we just don't know.
And we now know what it's like when it gets bad, and that's why you can definitely see it start to impact sentiment when it comes to individuals. Hey, Michael McKee, you always just make sense of all of certainly the economic data points that
All the
are out there.
things.
Well, I was going to say all the things, but I mean, there's just like so many. We talked about this with Ali Wolf this week. There's just conflicting data points. You get a good one, you get a bad one. So what does it mean? Where does it leave you?
That's why we have Michael McKee.
Exactly. Of all that stuff, he's
All right.
the chief stuff interpreter.
Exactly,
The
especially
stuff
here in
whisperer.
2020. All right, Michael McKee, International Economics and Policy Correspondent for Bloomberg, joining us from New York City. All right, we got a heck of a show coming up. You mentioned Brian Moynihan. He's going to be along with David Weston in the 3 p.m. hour. We're going to talk a lot about jobs. I would imagine David Weston's going to ask Brian Moynihan if he's going to join this Wall Street parade that nobody wants to be a part of in terms of laying off workers. We've seen Goldman
Not a fun one.
and others come out. We're going to check in on that specific story with Michelle Davis.
We are indeed. We're also going to hear from U.S. House Speaker Nancy Pelosi. She also caught up with David, so we've been sprinkling what she had to say about the prospect for more virus stimulus. Speaking of that, our cover story of the magazine, Jason, just, all right, think about this. Imagine going safely to a bar, restaurant, a wedding, parent-teacher night. I did mine, 2 hours on Zoom last night. Doing this without a vaccine. It's still possible if the U.S. can get its act together. Love this story. As I said, it's the cover of the magazine.
Yeah, it's a really great story and an important one. We're excited to include it in our weekend show as well. We're also going to hear from the CFO of Impossible Foods. He's going to be back with us, David Lee, talking about, talk about 2020, a SPAC that he's involved in, because anybody cool has got a SPAC, Carol. We know that to be true.
We don't.
We don't have one yet.
Okay,
Yeah,
I like that.
We're working on it.
We do have a food theme, by the way. We're going to check in once again. He's been so kind throughout the pandemic, finding time for us. Chef and restaurateur Danielle Boulou on getting diners back into restaurants now that you actually can with restrictions. It started yesterday, right? September 30th.
That's right. Yeah, well, and maybe you want to pair some fine wine with that. We're going to talk to one of our favorite guys, a real pal to both.
That's a question?
Neil Grossman. He's going to be along with us. He knows so much about the world economy. He also knows a lot about wine. We've had it. It's really good.
Yeah, looking forward to that. Let's do the Bloomberg Business Week Bite of the Day, one number that tells us a lot. Jason, today's number is 11%, has to do with shopping.
According to the Accenture Holiday Shopping Survey, more than 3/4 of consumers say they want their purchases delivered right to their doorsteps. Only 11% of shoppers, which is the second most popular choice, which is picking up at a local store. Even fewer are interested in curbside collection or a locker. So maybe not people rushing out to spend. Think a lot about Prime Day that's coming up in a couple weeks, which is going to really alter the shopping season.
I want it delivered to my door. I'm just
I know you do. I know you do. Let's get down to Washington now to deliver some headlines is Nancy Lyons. Hey, Nancy.
Thanks, Jason. Work is still underway to come up with a new economic stimulus plan. House Speaker Nancy Pelosi was asked by Bloomberg whether a deal is possible.
Well, I'm hopeful. Actually, doesn't mean I'm positive, but I am hopeful. We do have some areas of disagreement that are broad, and but we're going to be talking again later today. So we're still alive, and we're still talking, and I'm hopeful that we can reach an agreement.
Both sides face increased pressure to act, with more companies announcing job cuts, including airlines that received help under earlier rounds of federal support. Well, the chief executives of Google, Facebook, and Twitter declined to testify today before the Senate Commerce Committee, so senators of both parties voted unanimously to subpoena them.
Republicans complain that the social media are sidelining conservative opinions. Senator Ted Cruz.
Big tech poses the single greatest threat to free speech in our country today. Big tech are the robber barons of the 21st century.
Ranking Democrat Maria Cantwell added,
media domination by the platforms when they put their foot on the throats of local news media is also an issue.
Under consideration are amending the antitrust laws and or repealing the provision that the social media companies can't be held responsible for what they publish. In Washington, Irv Chapman, Bloomberg Radio.
Well, Apple is introducing more inclusive emojis with its upcoming update. Users will soon be able to select a gender-neutral Santa Claus. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser. So ahead of a conversation we're about to have with one of our experts down at Johns Hopkins, let's talk about where we are when it comes to the virus, because the headline's not great.
Yeah, not great. New York cases are surging. London is at a tipping point. New York contained the U.S.'s, of course, we know, deadliest COVID-19 outbreak, reporting its most cases since May. So that is certainly worrisome. I put it out on Twitter, and someone was like, "Okay, can you tell me which counties? Can I just know the specifics of kind of where this is happening? Because it is kind of, we're seeing certain areas around the state and the city specifically."
Yeah, exactly. So if you go a level down in New York, we're talking about increases mainly in Brooklyn and in Rockland County. That is a suburban county. It's on the other side of the Hudson River from where I am here in Westchester. So closely watched area there, but pretty close to New York City. So we're hearing from the mayor of New York City, we're hearing from the governor, and I think, as you mentioned, a lot of cautionary tales coming from Europe, and specifically the UK, and specifically London. We know that that is important to our listeners and viewers and readers, because so much of the world's financial economy flows through London, and companies making decisions about, oh, are we coming back to work? Are we not coming back to work in terms of going to the office?
Yeah, listen, Germany reported also its highest number of infections since April. Italy's cases, I should say, jumped. Spain ordered additional restrictions on movement and gathering. So, yeah, I just, I don't know where this goes. I don't know. Is it going to be different from that first wave? Are we smarter? Do we keep it under control? I don't know.
I hope we're smarter. I mean, here's a little bit of good news. The virus burden on Houston ICUs actually dropped to a 6-month low. You heard Michael McKee remind us that, Texas, Arizona, Georgia, those were places where we saw those big midsummer spikes right after the 4th of July as those states really aggressively reopened. If they're getting it under control, that's a good sign. But are we at that base level where we can just keep this contained going into the winter? Remains to be seen. We're going to have a lot of questions coming up for Johns Hopkins. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. U.S. stocks trading mixed. S&P was negative just a moment ago. Most stocks fell on pessimism. Democratic lawmakers and the White House will reach a deal for a fresh fiscal stimulus package. Oil is tumbling on concern the market may be oversupplied. Let's begin with crude. West Texas Intermediate down 4.5% now, dropping $1.80. Right now, WTI 38.42 a barrel. The Dow is down 82 points, a drop now of 0.3%. Dow Transport's down 0.6%. The S&P swinging between gains and losses. Little change now, up by 0.5 point. Nasdaq surging 93 points, up by 0.8%. The Nasdaq 100 index also pushing higher, up now by 0.9%. 10 years up 5.30 seconds. 10-year yield 0.66%. Gold up 1.1%, 19.06 the ounce. Recapping, S&P little changed, up by a point. The Dow is down 86, a drop there of 0.3%. Nasdaq up 0.9. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, let's dig into what's going on with the virus, especially as it comes to getting back to school, back to the office, so much more. We're checking in with Dr. Megan Collins, Assistant Professor of the Johns Hopkins Berman Institute of Bioethics, part of the Johns Hopkins Bloomberg School of Public Health. Of course, the Johns Hopkins Bloomberg School of Public Health, as you might be able to tell by the name, it's supported by Mike Bloomberg. He's the founder of Bloomberg Philanthropies and Bloomberg LP, the parent of this radio station. And what's interesting, Dr. Collins, is you're also the co-director of the Hopkins Consortium for School-Based Health Solutions. So let's start there. I'm a parent. Carol's a parent. Many of our listeners are parents. The school question, I think, is one of the biggest ones facing us as a society right now, not just when it comes to our day-to-day lives, but also the underlying economy. Where are we in this process right now?
Absolutely. So first of all, thanks for having me on. And yes, completely agree with you. This is sort of front and center, impacting everybody across the country, whether you have kids or you have colleagues that have kids. This is impacting all of us. And, you know, it's a very consequential decision about how and when to reopen schools. There is sort of rapid and there's significant variation across the country. Most school districts across the country are now either hybrid or completely online. New York City today was our largest school district in the country actually completed its phased plan of reopening for middle and high school students. They had started for elementary school students last week and earlier this week. So we're all in the place of how do we do this? How do we do this safely with kids and teachers and school staff safety having to be central to this discussion?
So how do you think we do it? Like I have a daughter who's actually been in school almost a month now or 3 weeks. It's a hybrid setup. They're being really careful and knock on wood, so far so good.
Which is great. And I think there are ways to do it. And I think, all other things being equal, if we, are able to meet the benchmarks, we want kids to be back in school. It's the best place for kids. And as you both intimated, it's critical to the economy as well. But there are several factors that are important. One has to do with what the community rate of transmission is. So there are certain places that it's just too high to reopen schools safely. If the community transmission rate is low enough, another consideration has to be capacity for testing and contact tracing. That has been a challenge in a number of places just in terms of availability of testing and turnaround time. So if you have a child who has symptoms and you need to shut down, a class or a bubble at school because of that, if you can't get testing for that kid back for greater than a week. The other piece is really having risk mitigation measures in school. And Carol, it sounds like they're doing that at your school. Those are things like making sure people are wearing masks, putting desks certain numbers of feet apart, things like that, which are really important as well.
So, Dr. Collins, let me ask you one sort of specific school question, which is what is the best thinking at this point? And I know everything is subject to change and we're learning every day, but what's the best thinking that you've seen around, okay, there's an outbreak in a school or there's just a couple cases in a school? What's the right sort of proportionate reaction? Do we know that yet in terms of sending people home, quarantining, shutting down? What's the sense we're getting there?
Well, there are CDC guidelines around this, and it really, what schools are trying to do, and it's important, is thinking about risk mitigation strategies to prevent, if somebody is positive, to prevent them having had exposure to a large number of other students. And that means, these ideas of grade cohorts and bands of students that don't necessarily interact with other students in the school. Teachers being the ones to move classrooms rather than students, things like that. You ideally want, if somebody is positive, anybody who's a close contact, which is somebody who's been around them less than 6 feet for more than 15 minutes, needs to quarantine. But you don't want to have to quarantine an entire school, so you want to figure out strategies to make sure the number of people that they're exposed to during the day is as little as possible without totally compromising their educational activities for the day. Easier to do in the younger grades than when you're talking about the middle school and high school grades where you have so much movement of kids throughout a building.
Right. Well, and also the idea, and I think we're all seeing this in our lives, parents are, the idea that's like, especially as kids get older, you have, slightly less visibility maybe as to, okay, they're in class, they're out of class, who are they talking to in the hallways, where are they going after? So, like all these little elements become very tricky from a social perspective, it feels like, Dr. Collins.
And it's so important to bring both kids and families into this discussion. I mean, when you think about it, all of our lives have been dramatically impacted by COVID, but students their lives have been thrown into chaos from being in the school building as of March 13th to not having kindergarten or grade school or high school graduations or proms. I mean, they've been impacted a lot by this.
Right.
And I'm gonna say, and also their parents. For Jason and I both have teenagers, and those who are seniors in high school, and it's not been easy. It's been really hard. All of this. We're going to come back. We're going to do a little bit of news, Dr. Collins, and then we'll come back, continue our conversation. Dr. Megan Collins, we'll get back to her. Assistant
To New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to continue our conversation with Dr. Megan Collins down at Johns Hopkins. I want to talk a little bit more about schools, back to office, and also kind of how this all filters into the broader scene, especially because we're going to talk about it later as it relates to testing.
Yeah, I think this is really important. All right, so we'll get into that in just a moment. Let's get back to your top business stories. Another check on that trading day. Here is Charlie Pellet.
A lot going on again today, Carol Massar. Just getting word from Allegiant Airlines that it has furloughed 100 pilots after talks with the pilots union failed. Shares of Allegiant Travel, the parent, little changed. Wall Street Journal's reporting Goldman Sachs Group is buying GM's credit card business for about $2.5 billion, a deal that furthers the Wall Street Giants' push into Main Street lending. The Dow, the S&P, NASDAQ, we are looking at an update. Right now, the Dow had been lower, but turning around now, up by 13, little changed, up 0.1%. Focus, of course, on stimulus talks. S&P up 12, a gain there of 0.4%. NASDAQ up 136, up by 1.2%. Stay with Bloomberg, by the way, for the latest developments out of Washington on stimulus. 10-year up 2.30 seconds with a yield now of 0.67%. Gold up 1.2%, 19.08 the ounce, and crude West Texas Intermediate slumping 3.6%, 38.75 for a barrel of West Texas Intermediate crude. A source tells Bloomberg European Union regulators are set to start an accelerated review of a COVID-19 vaccine frontrunner from the University of Oxford and AstraZeneca in a sign the shot could be the first to seek approval in the region. It comes as Reuters reports the FDA is widening a safety inquiry into the AstraZeneca vaccine. It shares the ADR's AZN is the ticker there, down about 0.8%. Dr. Jason Farley is a nursing professor at Johns Hopkins Bloomberg School of Public Health, and this morning on Bloomberg Television, he told us he is among volunteers taking part in those trials.
My vaccine trial is currently on pause. I'm planning to enroll and signed up for the AstraZeneca vaccine. It was the one most convenient to me, being offered by colleagues at Johns Hopkins. So it really didn't have to do with any specific safety profile in my mind. It was more about the convenience of access. But yeah, I, like everyone else, want to get back to normal, and so I raised my hand to participate. As a researcher, it's my ethical obligation to also participate if I'm enrolling patients in trials.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Covis Pharma, backed by private equity firm Apollo Global Management, has agreed to buy AMAG Pharmaceuticals for about $498 million, getting a specialty pharmaceutical company with a treatment for iron deficiency anemia that's been under pressure to improve its performance from an activist investor. Shares of AMAG, AMAG, they are pushing higher right now, surging, in fact, up by 44.7%. Recapping, equities higher now with the S&P up 12, up 0.4%. Gold again up 1.2%, 10-year yield 0.67%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We want to bring back our guest, Dr. Megan Collins, Assistant Professor of the Johns Hopkins Berman Institute of Bioethics, Johns Hopkins Bloomberg School of Public Health. She's also co-director of the Hopkins Consortium of for School-Based Health Solutions, and of course, the Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. She is on the phone from Baltimore. So, Dr. Collins, what are your expectations as we move through the colder months, certainly here in the Northeast and elsewhere around the country, and what it will mean for schools, whether it's, grade schools, whether it's high schools, whether it's colleges, whether it's universities?
So, great question. I think as schools are starting to reopen in person, which we're starting to see, more of that happening as a either hybrid option or some fully opening in person, we're going to see more cases. And one of the things that's absolutely essential is to try to monitor those cases that are happening from schools, from school-aged children, so we can better understand both the risk for kids as well as for the teachers and staff in the schools. We should expect that schools are going to need to close from time to time. And that is just going to be sort of part of, as this pandemic ebbs and flows, we're going to have to do that when it's not safe to stay open in terms of transmission to others in the school community.
So, Dr. Collins, we've talked about sort of the reaction when there's a positive test. And, one of the things we have seen that seems to have been fairly effective, especially at the college and university level, is a lot of testing. How does that figure in? Because if we get more rapid testing, how much does that change the calculus of how schools operate? And is it feasible to essentially apply a lot more rapid testing, especially at the sort of elementary and high school level?
So I think increasing the availability of testing is certainly part of the solution. And honestly, this is going to vary by school districts in terms of their access to resources. So we have places where, access to testing and access to testing with quick turnaround time is less of an issue. And then we have places that's a substantial issue. And that sort of brings up the fact that we need schools open, particularly in our more low-income areas, because of the fact that students rely on schools for so many additional services in addition to education, whether it's food or safety and security or school-based health services. And with schools being closed for this prolonged period of time, we've noticed a lot of negative impact on kids in all of those different areas.
It's interesting, and I know you're involved in an e-school initiative at Johns Hopkins, and I do wonder what you think the role of kind of e-learning will be once we get through the pandemic. Does it stick with us? Does it provide us, some upside when it comes to learning going forward? I'm just curious what you think kind of stays and should stay, maybe.
Great question. And I actually think there is a huge upside. I think that we have been forced to utilize technology in a way to connect with students and families more so than we ever have previously from an education system perspective, as well as, I'm an ophthalmologist. So as from a clinical care perspective, I've also employed a lot of telemedicine in the past several months. That being said, it has also laid bare that there are substantial equity issues in access and utilization of technology. And that while technology is important for schools, we have to recognize that there are a lot of kids who don't have the same levels of access or even access to devices at all. And those kids have been the ones who have probably suffered the most from being in a virtual learning environment where they can't meaningfully engage.
Right. Yeah. Well, and that's a whole issue that we could spend another hour talking to you about. We know you're working specifically on that issue, you and your colleagues there, so we really appreciate it. Dr. Megan Collins, Assistant Professor at the Johns Hopkins Berman Institute of Bioethics, and that's part of the Johns Hopkins Bloomberg School of Public Health, of course. And as you heard Charlie reference Jason Farley at Johns Hopkins, we rely heavily on our friends there at the Bloomberg School of Public Health. Dr. Collins joined us on the phone from Baltimore.
So does the world. I mean, those statistics are just,
it's become the gold standard, really, when it comes to the data. You're exactly right. Good point. All right, let's stay down in that mid-Atlantic area. Over to Washington and Nancy Lyons. Hey, Nancy.
Hey, Jason. Well, with time running out to pass another round of stimulus before the election, House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are still negotiating. House Speaker Nancy Pelosi tells Bloomberg Democrats have lowered their number.
We've come down very far in the negotiations, not abandoning any priorities, but shortening the timetable and putting some things off to the appropriations.
Pelosi says she will not simply accept whatever the White House offers just to get a deal done. Mnuchin says the president has asked him to come up significantly from the initial GOP proposal of $1 trillion. The House is scheduled to leave Washington at the end of this week, though members will be on call to return if there is a stimulus vote. President Trump is being asked to cancel 2 rallies this weekend in Wisconsin, where COVID-19 cases are on the rise. Bloomberg's Ann Cates with more.
The president is scheduled to campaign at the airports in Green Bay and La Crosse on Saturday, and local leaders fear the events will mirror other rallies at which masks and social distancing guidelines were widely disregarded. Wisconsin has one of the highest per capita rates of daily coronavirus cases in the U.S. The mayors of both cities say large rallies could further the spread of the disease. A Trump campaign spokeswoman says attendees will get a temperature check and be provided with a mask. In Washington, Ann Cates, Bloomberg Radio.
Democratic presidential nominee Joe Biden is picking up the endorsement of a general who was fired after mocking Biden during a dispute over the Afghanistan war strategy. In an interview on MSNBC, retired General Stanley McChrystal said he thinks Biden would set a tone that would bring out the best in an administration. Global news 24 hours a day on air and on Bloomberg. Quick Take powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Massar, your fine governor, Phil Murphy.
Yeah, he's been out there. He spoke actually with our team over at Bloomberg TV. And he came out to talk about a few things specifically, talking about taxes, talking about the state. Let's first of all listen to a little snippet of what he had to say about what's going on in my home state.
New Jersey is the state to raise a family. We want to keep it that way. We're also a quintessential middle-class state, and asking the wealthiest among us to help us make those investments is good for the middle class.
Well, listen, I mean, can you argue with any state that gave us Carol Massar? I mean, good Lord. Yeah, it's a great place to raise a family.
It is a great place. I got to tell you, I had a great childhood. Went to great public schools, and, you know, certainly things were going fairly well.
They set the Massar family loose on the world, so, you know.
We did a lot to help the economy in New Jersey, all 9 of us. What's interesting, though, is he did talk about the number of millionaires in the state, that they have been growing in the past couple of years. I mean, it makes sense. You know, New York Metro, everybody kind of benefits coming off of New York City. He did reject criticism that increasing their taxes is causing a migration. In fact, didn't we see a story about Tepper, David Tepper?
Well, that's what
back to New Jersey.
You read my mind. Billionaire David Tepper back from Florida. He, of course, is probably best known these days for owning the Carolina Panthers. He's moving back to New Jersey. It could cost him $120 million.
That's what love does to you.
Income taxes. Yeah, apparently that is what is driving it. But what's interesting is Phil Murphy may be like, oh, okay, you guys can leave. I got Tepper.
Exactly. Yeah, actually, a lot of you can leave because I've got
exactly.
Tepper.
No, you guys, no, you're. You want to go? Good. Yeah. Tepper's back.
Listen, it's location. If you work in New York City, even though people are moving out, you're still going to want to work where the jobs are. So anyway, check out that full interview at Bloomberg.com. You are listening to Bloomberg Business Week. I love the Garden State.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A choppy Thursday, stocks fluctuating as investors weigh the chances that Democratic lawmakers in the White House will reach a deal for a fiscal stimulus package. A rally in tech shares, though, lifting the NASDAQ 100 index, while the S&P 500 index has been swinging between small gains and small losses. Of course, we get the jobs report tomorrow, last jobs report before the November election. Here are the numbers. The S&P up 14 now, a gain of 0.4%. The Dow holding on to a 15-point gain, up 0.1%. NASDAQ is surging 146 points, up 1.3%. The NASDAQ 100 index up by 1.4%. Dow Transports down by 0.1%. 10-year up 1/32, 10-year yield 0.68%. Gold up 1.2%, 19.08 the ounce. Crude slumping 3.8%. West Texas Intermediate down $1.52 a barrel, 38.70 on WTI. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser. So we're talking a lot about jobs today.
Yes.
Who's getting them, who's not, who may be losing them. And Wall Street got a little more worried this week, I think, Carol, because what was seen as a bit of a moratorium on job cuts, well, that clearly was lifted because we saw some people losing their jobs over the course of this week. And we're also seeing a lot of drama, it feels like, on Wall Street right now.
Well, when it comes to Wall Street, we're now at like 68,000 and counting when it comes to cuts in the financial sector. And as you said, Jason, yeah, this is a major theme this week. And this story specifically, there's one on Goldman Sachs about job cuts. It's our most read story on the Bloomberg all day today. So tracking the comings and goings of Wall Street for us with her nonstop and really terrific reporting is Michelle Davis. She's Bloomberg News finance reporter. She's with us on the phone in Vermont. We are convinced you never sleep because you are just on it.
Scoop machine. So what do we need to know today, Michelle, as you guys especially have synthesized this? I mean, that was sort of, as we were talking about, like, get us Michelle Davis to just make sense of all of this because you guys are working as a team. But what do we need to take away, especially as we're looking at jobs day tomorrow? What's the jobs picture on Wall Street right now?
So, you know, you mentioned it right at the top. Bank layoffs are back, and it's interesting timing because if you'll remember when this pandemic started 7 months ago, a lot of these U.S. banks and banks across the world said that they weren't going to conduct layoffs during the pandemic, or at least until next year. And now, 7 months into this, they are finding that they may have made promises they couldn't keep. As we've confirmed with sources at Goldman that they are cutting about 1% of their workforce. That's about 400 positions. It's our understanding that a lot of those cuts are in back office roles that it seems like the bank could cut costs by automating a lot of this. But, you know, it was across the bank. And we also confirmed that JP Morgan last week notified hundreds of employees about layoffs. You know, they're a much bigger bank. They employ 250,000 people. So it's probably not as big when you compare it to Goldman Sachs. But it just shows that, you know, the layoff machine is back. The industry overall has been reducing headcount over the past few years, and many people were expecting a pickup in January as some of these pledges rolled off, but it seems like banks are doing, you know, getting back to layoffs earlier than anticipated.
Right. So, Michelle, is this normal attrition, or as someone tweeted to me, and I'm being a little facetious here, we're sorry we have to lay off floors 2 to 6 because if we don't, we can't pay bonuses for the top floor. I mean, is that what it's like? What is this about? Is it just business as usual, just picked up a little bit of momentum, or is it about something else?
You know, there's a lot of things going on here, and the banks themselves have avoided saying that, you know, these are pandemic related. JP Morgan, for instance, has said that its layoffs, you know, are part of a review it does every year of resources. They never pledged to stop layoffs, so it's probably unsurprising that they're doing this given, you know, how much attention they pay to maintaining that fortress balance sheet. But at Goldman Sachs and at some of these other banks, think Citigroup or Wells Fargo, we know that the consumer is not as strong as it was going to be. Banks have set aside a ton of money to prepare for loan losses, and so to
make up that loss, they have to cut people. And that seems to be what's driving a lot of it. And a lot of it just seems to be banks also taking advantage of this opportunity to use technology to eliminate some roles, especially now that, a lot more happens virtually than maybe they were used to, or maybe than they thought was possible previously.
So, speaking of working remotely, I want to move to another story that caught our attention that you wrote, Michelle. People working remotely, and it was because of the pandemic. And JP Morgan finding that more than 500 workers got virus relief funds. I got to tell you, this was one where I think Carol and I both read it and went, wait, what? Tell us about this.
So this story was a development on some news we had broke a little ground on a couple weeks ago, where we reported that JP Morgan had uncovered that some of its employees had misused COVID relief funds. And it turns out that they conducted this internal investigation. They found that, as you said, more than 500 of their workers got EIDL grant money that was intended for small businesses, to help them get through the pandemic. A lot of these people had legitimate reasons for getting the money, but JP Morgan, because it was so many, 500 people, they did dig into it. They conducted an initial high priority investigation and found that in the group of director level employees and employees getting a certain amount of money, they found that fraud among 5 of those. These are JP Morgan workers that had checking accounts also with JP Morgan, and then they found dozens more across the entire group. So I think the takeaway here is that JP Morgan is, they're kind of like a cross section of the American population, and we're finding that a lot of these programs that were rolled out really quickly, to get money to businesses and people in need, a lot of it was riddled with fraud, and it seems like, fraud may have been way more pervasive than we know or than we thought initially.
And we knew that there was going to be some of this because we were rolling this program out quickly. And I think most people agreed, listen, that's okay because we need to get money out to folks. But it is still a little worrisome when you see the stories, when the truth comes out. One last thing we got to ask you about, what's with this frequent flyer points as an alternative for investors? What is JP Morgan up to?
So this was an interesting one. JP Morgan is working on this cool partnership with this kind of fintech-y company called Affinity Capital Exchange, which runs an exchange where people can buy and sell loyalty points, like frequent flyer miles or like hotel rewards points. And so what they're trying to do is basically institutionalize the loyalty points market so that hedge funds could trade them the same way they would trade stocks or bonds. Right now, the way this whole market works is the airline sells points directly to banks, who then issue them to their credit card customers when they spend money. It's not very liquid. Banks don't like having these illiquid liabilities on their balance sheets. But for the issuers, this structure where they're issued on an exchange like this also allows them to tap into the value of these programs, which are super profitable. They're for some of the banks, or for some of the airlines, people have said without the rewards programs, they would be bankrupt. And so
Okay, guys, I'm placing an order to sell short euro at 117.44. Order placed at 117.44. To sell short, yeah? Okay, let's see.
Frequent flyer miles. All right, Michelle Davis, thank you so much. The hardest working reporter at Bloomberg, finance reporter, joining us on the phone. Well, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on 106.1 in Boston, Bay State Business, that's coming up next. We're going to do some econ here coming up. It's Business Week.
Short position open on Euro at 117.44. Okay.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this first trading day of the fourth quarter, Thursday, October 1st. The Dow, the S&P, NASDAQ, all higher for now. Stocks, though, have been fluctuating as investors weigh the chances Democratic lawmakers and the White House will reach a deal for a fiscal stimulus package. A rally in tech shares has lifted the NASDAQ 100, while the S&P 500 index has been swinging between small gains and small losses. Here's where we stand. The S&P is up 17, now a gain of 0.5%. The Dow is advancing 43 points, higher by 0.2%. An hour ago, the Dow had been lower. NASDAQ up 165 points. That is a gain of 1.5%. NASDAQ 100 index up 1.5%. Dow Transports, they're trading lower, little change, but lower by 0.1%. 10 years up 1/32 with a yield on the 10-year 0.67%. And gold is up 1.3%, 19.09 the ounce for West Texas Intermediate crude on gold. Most stocks falling on pessimism that lawmakers and the White House will be reaching a deal on a fresh stimulus package. Well, as for markets and what the economic data is telling us, Jim O'Sullivan is Chief U.S. Macro Strategist at TD Securities USA.
There does seem to be a lot of optimism priced into markets. I mean, I don't think people expect to see the strength that we're seeing in the third quarter, or just saw in the third quarter, to be repeated going forward. But clearly, people are assuming that it's up and pretty solid from here. I mean, exactly how strong? But yes, I would say the risk is that people probably are a little ahead of themselves from that perspective.
And, of course, tomorrow morning, 8:30 a.m. Wall Street time, the all-important jobs report. That will be the last jobs report before the November presidential election. Auto sales are recovering from the pandemic-induced slump earlier this year, with third-quarter deliveries beating expectations as consumers ditch shared rides for their own vehicles and seize on cheaper borrowing costs. GM, Fiat Chrysler, Toyota, all reporting better-than-expected results for the quarter. Today, we're seeing GM shares. They are advancing by 2.6%. Fiat Chrysler down 0.1%. Ford up 1.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, you're listening to Bloomberg Business Week. Coming up in just a minute, we're going to hear from Brian Moynihan, CEO of Bank of America. We caught up with him almost exactly a year ago. Remember that?
It was a great panel. It was a great panel of just kind of where we were. And, man, there was a lot more optimism than certainly where we are when we talk to leaders today. And it's really relevant to today's headlines. We just talked with our own Michelle Davis about what's going on in terms of Wall Street jobs. We're increasingly seeing job cuts. They're up to about 68,000 that have been let go this year. So we'll see what Brian has to say about the labor market, whether or not they're thinking about cuts. So we do want to head over to Bloomberg TV, where Bloomberg Balance of Power, Bloomberg TV and radio host David Weston is sitting down to talk with the Bank of America Chairman and CEO Brian Moynihan. Lots to talk about, certainly, on this Tuesday. Let's take you now live to Bloomberg Television.
Thank you so much, Romaine. We all know Brian Moynihan is the chairman and CEO of Bank of America, but he also chairs the International Business Council for the World Economic Forum. And working with other major companies and investors, he's put together something investors and companies have been looking for, and that is a uniform way of measuring a company's performance on environmental, social, and justice issues. We now welcome Brian back to Bloomberg to take us through what he's come up with. So, Brian, thank you for being here. Give us a sense of what you did come up with. You've got a fairly rigorous schema here for reporting.
Well, thank you, David, for having us here. So the International Business Council is a global organization consisting of 100+ companies, about a third of which are in Asia, about half in the United States, the other third in Europe. And they've been working for the last couple of years to define, how to implement the Sustainable Development Goals of the UN. And you need a set of metrics to measure that so people can genuinely test whether it's investors, whether it's society, civil society, or other companies that can generally judge whether they're making progress. So we set about with a group of us working on it, the IBC, and got the big four accounting firms involved, and Klaus Schwab leading the World Economic Forum. And they came up with 21 core metrics, 20-some core metrics around people, prosperity, principles of governance, and planet that basically follow the SDGs in terms of outline and give measurable standards that consolidate a lot of other standards out there, but give measurable standards that people can hold themselves and disclose and be accountable for, which is something we've needed.
So anyone can go look at these, and I encourage people to do it because they're pretty straightforward. As you say, they're very specific. There are numbers attached to them. Do these apply across sectors? Because different companies may have different relationships to some of these issues.
Yeah, I think they will apply by sector. So the IBC is a group of companies which represents all kinds of companies, but in the World Economic Forum construct, there are what they call industry verticals, i.e. the oil and gas companies, the auto companies, the financial services companies. So we try to build a set of metrics which go across any kind of company around the core issues around implementing the SDGs. And the SDGs, the world adopted in 2015, 197 countries adopted them. And then the IBC membership said we will run our companies to help drive the SDG implementation in 2017, and now you have a way to measure whether we're doing that. But you have to back up for the full thing to go to basically what these metrics measure is stakeholder capitalism. The idea that you've got to do a great job for your customers, your employees, your shareholders, and society. And that's the basic tenet here that Klaus Schwab and the World Economic Forum have been working on for 50 years. The BRT last year, it's a way to measure stakeholder capitalism.
So what kind of buy-in are you getting? You said that a large number of companies helped put it together. Are any of them actually pledging to use these and report against them? Are any of them reporting against them already?
Yeah, some people report against parts of them already, and they may be in different fashions. Like we have a human capital report, which would include many of the measures around the people side of it. We have the climate disclosure that we do, which may meet the climate disclosure, but it's different pieces. And so many of the companies do it in part, and that was the wisdom that Klaus had and the group had to get the big four accounting firms, because they went and looked at all the measurements out there, pushed them in a pile, and think of them as concentric circles, whether it's the Climate Disclosure Project, whether it's SASB, or whether it's GRI, and they looked at all those, and they said, where's the common circle? So many companies disclose part. The goal is between now and early January to get many more companies to sign up, and then basically roll through and start disclosure in the next year.
Brian, as a practical matter, I don't think the private sector can do this by itself. And it is global. It is the World Economic Forum, after all, whose auspices you're operating under. What kind of buy-in do you need from governments all around the world?
Well, the team has been working with not only governments, i.e. the Bank of England, when Mark Carney was there, it had a major role in working and has as a special envoy has that. We've been working with Mark in his various capacities. We've been working with the EU. But it's also these standard setters, the rating agencies, and then all those standard setters I mentioned before. And the idea is we've worked with them all and coalesced them all and said, this is a convergence project. It's not a we're better, we're smarter, we got a better idea. It's you've had all these ideas. We just have to organize them. For the company's perspective, what's in it for a CEO like myself is if I agree to do this once and I do it in a way my accounting team's colleagues can say makes sense and is audible and measurable, then when other people come and say, I'd like you to do something different, I can say, no, this is the way we do it. It's recognized, it's measurable, it's comparable across companies. So if you want to measure me against one of my competitors in terms of what we do under Scope 1, Scope 2, and how we're working on Scope 3 emissions or something like that, you have it all on paper. So what I can do is have a much more organized framework. So it takes all those elements to make it work.
You deal with the U.S. government fairly regularly, I dare say. What kind of reaction are you getting out of this administration? Because there have been some things they've done that have expressed at least skepticism about considering ESG in investment decisions.
There have been some back and forth with the rules and regulations, but let's go back to 2 or 3 principles we're trying to establish here. One is the world believes we have to make progress on these major issues. That's what all the countries signed on to in 2015 with the SDGs. That takes $6 trillion a year. The charity in the world is about $1 trillion a year. It's wonderful. It just doesn't have enough money. The governments of the world think about the operating budgets being a negative basis just because of the dealing with the COVID crisis and other issues. The money's not going to be there. The private sector and aligning capitalism, making capitalism work to achieve these goals is the key to actually having the money to get them done. And so that really takes 2 people, operators like ourselves, and then the owners, which are the investors. And the investors are coming at the same thing. So whether government is for moving it faster or slower at a given time, the reality is the investors, the people who own the assets, the people who own stock in our company, and people who invest with Merrill Lynch, for example, want their companies to both do great for them as shareholders and do great for society. So this is being driven really supra any government or any nonprofit or any guidepost. It's now being driven by the people who own the companies.
Brian, one of the 4 categories, as you list them, is people. And right up at the top of that category and what you put out is diversity and inclusion. Talk to us a little bit about that. Specifically at Bank of America, you have a new lead outside director.
Yeah, we've had the pleasure of having a lead outside independent director named Jack Bovender for the last 5 or so 6 years. Jack retires with the annual meeting next year. And so the board elected Lionel Knoll to succeed him. Lionel is been with us for 5 or 6 years as a director, at least maybe a little longer, does a superb job for us. But he is an African-American, and it'll be the second time our company has actually had a board leader as an African-American. Walter Massey was the chair for about 1.5 years early in the decade.
I dare say there's been an issue, actually, particularly in the financial services industry, about whether there's a sufficient talent pool, I think was the term used by one of your competitors. What is your experience at Bank of America in terms of having a diverse talent pool you can draw upon in order to bring people in from outside at all levels of the company?
Well, we look at our company. There's 8 levels in the company that my colleagues run for me and the board of directors. And we measure diversity representation at every level, and we measure it against the standards of society, especially in the United States, where you can do this a little more easily. And so we look at the male-female representation, which is more than 50% women, and then we look at it at every level. And all we're striving to do is to match the percentages in society. Is 17% Hispanic, 13% Black, African American, Native American, Indian, Asian Indian populations. We're looking at all those to try to figure out how do we get to match it at every level. In some places we have more work to do, some places we're in good shape, and it really depends on the business and the heritage of it. As we bring people into the company, the 2,000 plus kids we hire out of school every year, it just completed another class. They are completely diverse, and as you move through the organization, you have plenty of diversity to rely on, and all we got to do is be careful how we promote and pay attention, and we've made great progress. We've increased the representation of managers dramatically over the last few years, both of women and African Americans and Hispanics and others. But we have more work to do in some areas, and we just have to do it. There's plenty of talent in the company and plenty of talent outside, and we acquire it all the time.
When we talk about personnel at the financial institutions, particularly the big banks right now, we think about diversity and inclusion. We also think about the overall level of employment. We've had some significant layoffs now announced by a couple of your rivals, most recently Goldman Sachs. You early on in the pandemic said you were going to not lay off anybody through the calendar year. Do you anticipate significant layoffs at Bank of America in the future?
We manage headcount very carefully. So when I took over as CEO, we had 305,000 people working for us, and today we have 212,000 or round numbers. We measure it very carefully. So we'll keep letting attrition be our friend, as we say, and we'll keep working the headcount into what we need. Right now, we're temporarily staffed a little higher because, frankly, for the safety of the teammates who are high risk relative to the COVID virus, we had to get them out of the public domain and move them, and then it took us a while to reapply them to other tasks. And in their place, we had to hire new people to replace them. And so we'll work it back down, and we've said no layoffs for this year, and we will stick by that.
Brian, you have such a unique vantage point into the U.S. economy, particularly when it comes to consumers, all sizes of companies, small, medium, and large. What are you seeing in terms of spending patterns right now, particularly as we see some of the stimulus that had happened earlier in the year wear off?
Well, David, you and I talked a week or so ago, and I said that the consumer spending would continue to be strong, and it does. And today you saw more confirmation in the outside world of that. What we see is year-to-date, the 2020 spending, which is over
down in the economy to a large degree. There were a lot of loans that were deferred, whether they're mortgages or business loans, things like that. As you look at those deferrals, do you think some of those are going to turn into delinquencies?
As you look at our deferrals at the high point, we were about $50+ billion. We're down to about $14 billion. 11 billion of those are in the mortgage arena just because of the nature, the length of deferrals. Our credit card deferrals are down to next to none. $400 million in total deferral. It's not going to be an issue. The people paid. We went to our customers and said, if you need a break, tell us, and they did. And we went up to 2 million deferrals. We did 480,000 in a week at one point. We're down to a couple thousand a week, and it's really a non-event. The real estate piece, the consumer real estate piece, home mortgages will work through based on the statutes and rules that were passed. But the consumer's in good shape and paying us, and our delinquencies are good.
Consumers are in good shape. We still have a lot of people unemployed that were employed before the pandemic. We're working it down. We're adding jobs, but not as fast as we were. We have something like 11 million people unemployed. What does the U.S. economy need from your vantage point right now to get really fully back?
Well, the economy, the thing about the economy that people have to focus on is you had a deep trough in the second quarter, and you're having a big restoration. Recovery might be too strong a word, to bring you back to an economy which is about 95% of the size that it was before the crisis. And now we have to close that 5% up and grow through it. The good news is our economists basically moved in our last estimates up a little bit more in the near term and moved the break-even point where the economy post-COVID is as big as the economy pre-COVID into the first part of 22 from the end of 22. That's good news because that means we're coming out the other side. So what do we need? From a human aspect, we need to make sure that we take care of the people who are affected by this virus who because of the virus can't get back to work. And that's a lot about the restaurants, a lot about the industries that were talked about before I came on today in terms of airlines and cruise ships and then help the states get through this fiscal hole, put in the nonprofits, the performing venue type sectors, performing arts sector, the nonprofits, the great nonprofits in New York are sitting that provide these great performance venues for us. We have to, in my mind, we ought to have a stimulus aimed at helping them. And because in the end of the day, they haven't crossed the river yet. There are a lot of industries which are back to normal sales levels and doing fine, that we ought to take the careful resources that we need to usher on behalf of the American taxpayer and aim it at the places where it's going to have the most benefits. That's unemployment support for those unemployed, and a support for those companies to continue to be able to be there on the other side of the crisis.
Give us a little sensitivity analysis on the relationship between getting that fiscal stimulus out of Washington and your projections on when the economy comes back.
I think right now the assumption is that the economy is kind of to the level, so it would move it out. I'd have to ask the experts again what they think the difference is. They don't bake in a lot of fiscal stimulus right now because if you think about it, when they came out with the last assumptions, there's not as much baked in just because of the politics at the time. It's encouraging to hear that they're talking. I think hopefully we'll hear something positive here in the relative future, but it's not so dependent on it now. But it would be much faster recovery, and it's the right human thing to do.
Okay, Brian, it's always a great pleasure to hear from you, and particularly on this new subject, actually, of trying to get some metrics around ESG. That is Brian Moynihan. He is the chairman and the CEO of Bank of America. Taylor?
All right, and that is David Weston speaking with Brian Moynihan, of course, CEO and chairman of Bank of America, getting an update on a whole bunch of different things, including, I think, the most notable thing I heard, Carol, no layoffs this year, sticking by it, unlike some of his rivals there on Wall Street who have gone about starting to reallocate their workforce, as it were.
Yeah, he even said that their headcount was a little bit higher, and at this point, but they're not planning to do any layoffs. You're absolutely right, Jason. It goes against what we've been seeing from a lot of the other big banks. I also thought it was interesting. You talked about 2 million deferrals from some of their clients about kind of helping out their consumer base, and he did say also that consumers are in good shape.
All right, you can find all that, I should say, later on Bloomberg.com. In the meantime, let's get to Charlie Pellet. He's got an update on the trade. Hey, Charlie.
Hi, thank you very much, Jason Kelly. 40 minutes to go ahead of the closing bell. Bank of America shares, by the way, trading lower now by 0.4%. The Dow, the S&P, NASDAQ are all advancing, led by gains in technology shares as investors weigh the chances Democratic lawmakers and the White House will reach a deal for a fiscal stimulus package. Here's where we stand with the S&P up now by 13 points. That's a gain of 0.4%. The Dow holding on to a narrow 8-point gain. Little change there. NASDAQ is up 148 points, up 1.3%. Seeing a rally in a lot of the big tech names today. The NASDAQ 100 index up 1.4%. Some of the advancing tech names include Zoom up 1.6%, Tesla up 4.1%, Apple up 0.6%, Microsoft up 1.1%, Facebook shares up 2.1%, and Amazon higher now by 2.2%. 10-year up 230 seconds, 10-year yield 0.67%, gold up 1.1%, 19.07 the ounce, and West Texas Intermediate crude down 4%, 38.63 now for a barrel of West Texas Intermediate crude. Croc shares gaining as much as 13% to their highest levels since 2007 after an Instagram post from pop star Justin Bieber hinted at a collaboration with the plastic clog maker. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Bieber Crocs, come on.
Why not? Song of the day. I hear that coming.
Yeah, exactly. We're going to have to wait till next week to get Dave Wilson and a little Bieber fever. Right. I love it. I'd buy some Bieber Crocs.
Talk about a celebrity collaboration. Hey, listen, imagine going, Jason, safely to a bar or a wedding or parent-teacher night. I did mine, a couple hours of Zoom last night, without a vaccine. Apparently it's possible, but it requires the U.S. getting its act together.
Yeah, well, and that may be the toughest part about this. We're talking about rapid COVID tests. It's the cover story of this week's edition of Bloomberg Business Week. We have one of the co-writers, Michelle Cortez. We love catching up with her. She covers all things health, medical, science for Bloomberg. She has been one of the most dogged and most influential reporters on this beat for sure. She joins us on the phone from Minneapolis, along with Joel Weber. He is the editor of Bloomberg Business Week. He joins us from Massachusetts. So, Joel, such a great cover and cover story. Tell us about this piece and set us up to talk to Michelle.
So we set out to do this story because, you know, we've spent a lot of time talking about vaccines and the hope that they can get us out of this mess, right, and give us back a semblance of the life we had before the virus. And what we also have started to realize was that, you know, if we actually got our act together and got some ability to do accurate, fast testing, there's a way to actually have a semblance of normalcy again before that vaccine, which still could be a ways off. And that was sort of what Michelle and her co-author Drake Bennett dove into for this week's cover story. It was sort of like, what exactly, how close to having a decent, fast test are we exactly? And, you know, what implications could that have? I mean, I want to go to restaurants and send my kid back to school and all those great things. And like, what, you know, is there a version of reality that might look like that? And how do we get there, like, now? And Michelle, why don't you pick it up there and tell us how close to a version of reality like that are we?
So we do see that there is ways where things can happen somewhat in a semblance of normalcy, right? Any of these sports events that we're watching, we can see that they are on top of it. They know who's positive. They know how to knock it down, you know, put everybody under quarantine and whatnot and keep it under control. The question is how do you do that for an entire country of 330 million people? And the answer is that it is theoretically possible, but it is going to take a huge amount of effort on behalf of our government, on behalf of the diagnostic test makers who are now starting to bring all these very cool new products to the market, and honestly on behalf of Americans, people who maybe don't want to wear masks, but if you get a positive test, you've got to stay home.
Michelle, this is about seeing the spread of the virus, you know, in anything close to real time. This is what we're shooting for, right? I do wonder, though, with everybody so obsessed and focused on getting a vaccine, rightfully so, you know, do we have the wherewithal among regulators, the FDA, and then the companies that need to produce these things, you know, in mass quantities?
There is absolutely going to be a huge lift when it comes to this. The industry that's working on it, of course, this is what they do, and that's what the story goes into. And you know, Joel and Drake Bennett, what a fabulous writer he is, did a really great job in making sure that we not only looked at what is happening here, but what also has to happen in order for it to come to fruition. I personally don't think that people are gonna not do it. Like, I think there's questions about whether or not people will get vaccinated. But if there were tests available, I think the vast majority of Americans would take one as often as we give it to them. So the industry, I think, is going to do it. The question is how cheap can it be, and how can we make it available to everybody who needs it in order to make a difference with the amount of virus we have in the country, and that's the point.
And Michelle, I want to dwell on sort of the technical aspects of what these rapid COVID tests look like. They're not the same thing as, you know, putting a swab up your nose, right? Like, the whole point of this is that actually there's a different way that we could be testing, and that's what allows us to do it cheaper, better, faster. What are the mechanics of this testing look like?
Well, the beauty of this story actually is that it looks broadly across all the different technologies that we're talking about. And one of the things that I was most frustrated about in terms of how people have been covering testing generally is that there is kind of this Pollyanna-ish approach of if we were just willing to make the effort, we could do it. And in fact, that's not the case. When it comes to what you're talking about, Jason, I think you're talking about the lateral flow tests, which are like the pregnancy tests. And in fact, what we have right now, you still do need to do a nasal swab. But the thing is, you could do it yourself. You know, you just put it up your nose. That's what Abbott's Binex now is. You put it up your nose, you stick it into the pregnancy test, you squeeze a little bit of buffer on it, and which is a liquid, and then that just carries that little viral, you know, the genetics from what's inside your nose. It carries it along this little strip. And if there's antigens, essentially the virus, in that sample that you took, it carries it down that pathway towards the antibodies that would normally be fighting a virus if it was in your body, but they've instead just attached it to this strip. And if those two things click together, a little flag pops up, a little nanoparticle of gold appears, and then you know you're positive.
And you could sit down and have dinner in the restaurant then.
Right. Yeah, I mean,
or not in that case. Yeah.
Depending on the diners around you.
Yeah, exactly. But I mean, Michelle, this is, not to overstate it, I mean, this is a potential game changer in many ways, not just for our daily lives, but economically. I mean, this could unlock even if it's in limited geographies, people's ability to really get back to what feels like something very close to normal.
Yeah, absolutely. We were talking to folks from Harvard University, and one of the things that I found most compelling was this idea of a virus budget. And what that means is that you can, if we do the testing right, we can tell how much virus there is circulating in our communities. And if there's not a lot of virus out there, then really you should be allowed to do things. You should be allowed to send your kids to school and eat in restaurants and go to the movies. And you should be able to do that without a lot of fear. But you need to have it being watched very closely so that when you start seeing an uptick in that virus spread, everybody can back off a little bit and let it calm down. Because remember, all the virus is doing is trying to jump from one person to the next person to the next. And if we don't make that possible for the virus dies out. And it happens over and over again. It is going to be absolutely a roller coaster that we're going to be on for at least the next many months and perhaps years. So it's something we should really get used to. And this idea of a virus budget, that we know how much is out there. When there's not a lot, we can go out. When there is a lot, we all need to just take a couple of steps back and let things calm down, and then we go and do it again.
Okay, Michelle, and what companies and should we be particularly watching for this style of tests, and how close to being able to scale the mechanisms are we?
Great question. Of course, the only really large publicly traded company that is working on this, that has a product out right now, is Abbott with the Binex Now. Of course, the U.S. government has bought up the entire supply of that, so we're waiting for others to come along. E25 Bio, they were actually trying to solve this problem in developing countries for things like dengue, and then they realized, hey, everywhere in the world is like a developing country here. Nobody has this testing infrastructure to handle this. So they pivoted. They're working on it now. OraSure, you probably know about them because you can go into your supermarket or a pharmacy and pick up an HIV test that you can do at home. They're trying to get that done for coronavirus. If you could just go to a store and buy one and do it yourself on your own dime, you don't have to wait for anybody else. And then there's companies who are using CRISPR technology. Mammoth Bioscience is doing that. Sherlock is doing that. And they are using that kind of very, very cutting-edge technology that looks for the virus itself. Normally, CRISPR goes in there and edits the genome. What this is doing is it's making a cut that fluoresces the test itself, and then you would know whether it's positive or not. Super precise.
Well, this story is incredible. It's a tour de force of reporting, but we've come to expect that from you, Michelle. So thank you. Once again, Michelle Cortez covering all things virus, all things health science, and medical tech for Bloomberg. She's got the cover story this week, co-written with Drake Bennett, another one of our faves. So it's just favorite on favorite here this week on Bloomberg Business Week. Our thanks to Michelle and, of course, to Joel Weber, the editor of Bloomberg Business Week. He joined us from Massachusetts, Carol.
What's great about her story, and every time we go to her, it really digs deep so that, there's the headlines that we all talk about, but she really gets into it so that you understand truly what's going on. And I feel like this is an important part of the story. We haven't spent as much time. We spend so much time talking about a vaccine. This rapid COVID testing, I took a COVID test on Monday. I'm still waiting to hear, right? Yeah. I'm just saying it would be a game changer, especially in getting an economy like New York City, back open fully or close to it.
And the economic piece of this, I think, is incredibly important because we have to be in a mode where we can sort of get out into the world. All right, much more ahead, including the close of trading. Let's figure out where we are in the markets with Charlie Pellet. Hey, Charlie.
Thank you very much, Jason Kelly. Great conversation. We've got the Dow, the S&P, NASDAQ trading mixed right now. 29 minutes to go ahead of the closing bell. The Dow, choppy session here. The Dow is now down 32 points, a drop of 0.1%. The S&P up 9. That's a gain of 0.3%. NASDAQ up 138. Quite a divergence in markets here. We've got tech shares advancing today. NASDAQ up 1.1%. 1.2%. NASDAQ 100 index up 1.3%. Among some of the advancing technology stocks today, Tesla up 4.4%, Amazon up 2.2%, Facebook shares up by 1.9%, Apple is up by 0.6%. A source tells Bloomberg European regulators are set to start an accelerated review of a COVID-19 vaccine frontrunner from the University of Oxford and AstraZeneca, in a sign the shot could be the first to seek approval in the region. Shares of AstraZeneca, the ADRs here in the United States, they're trading lower by 0.9%. Dr. Jason Farley is a nursing professor at Johns Hopkins Bloomberg School of Public Health. He's also taking part in those vaccine trials as a test subject, and he says results are going to take a while.
So in the United States, for example, we are talking about not having really strong evidence. We're talking at least 90 days, preferably 6 months to a year afterwards. But those vaccines are likely not even enrolling their second doses most of the time until October into November. And so if you say at its absolute warp speed, you're really talking about the beginning of 2021 before we have at least 90 days of data from those people.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Covis Pharma, that's a company backed by private equity firm Apollo Global Management, has agreed to buy AMAG Pharmaceuticals for about $498 million, gaining a specialty pharmaceutical company with a treatment for iron deficiency anemia that has been under pressure to improve its performance from an activist investor. Shares of AMAG, they are pushing higher today, up by 44.7%. Recapping, we've got the 10-year yield 0.67%, gold up 1.1%, West Texas Intermediate crude down 4.1%, S&P holding on to an 8-point gain, up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, along with my co-host Jason Kelly. Well, we've been talking about this throughout the week. The coronavirus pandemic, we know, a public health crisis. It's also an economic crisis felt by millions around the country, but the pain has not been distributed equally. The youngest members of the workforce, they have borne the brunt of the fallout and could face some permanent danger. Bloomberg Surveillance co-host Lisa Abramowitz tackles that topic in a Bloomberg TV special report. It's airing this week. It's called Generation Interrupted. Here is Lisa with another preview.
As we've been saying all week, the job prospects for college grads right now is dim. It's not just the number of open positions, but the scope of jobs available. Torsten Slok weighs in on the situation today. He's chief economist at Apollo Global Management.
Teenagers and people between 20 and 24, they have actually generally seen the quality of the jobs being created have actually been lower because there haven't really been many jobs, because we haven't really opened up the economy quite yet enough for new graduates to come out and find jobs in those industries that were hit the hardest.
And for this recession, it's not just those entering the workforce. People looking to switch jobs or change firms are also seeing a drop in the quality of what's available.
Normally, people who are switching jobs, you see that wage growth in the data from the Fed shows that wage growth normally goes up for people who are switching jobs. But this time around, we're actually seeing wage growth go down, which probably is telling us that people are willing to take jobs at lower pay just to get into the labor market again. So that's also, from a very broad perspective, not helping new graduates. That's not helping people who just finished their education very broadly, because there's now a lot of competition from people who've been in the labor market for 5, 10, 20 years who are now willing to take jobs at a lower pay.
History shows prior recessions can reshape the job market for decades and also change the behavior of those growing up in the heart of the downturn. Slok says that's likely happening again now.
Not only are there studies looking at what happened after 2008 and 2009, there are also studies going back to the 1930s. And everyone who grew up during the 1930s, the so-called depression babies, they had significant different behaviors on a number of different fronts, not only in terms of home ownership and in terms of debt levels and in terms of caution generally from a consumer perspective, but also in terms of what was the rest of their careers and the rest of their job market prospects for several decades later.
Apollo chief economist Torsten Slok also sees telling signs in savings rate data. While savings among high-income earners has gone up this year, savings among the bottom half, which often includes new graduates, is lagging. Grads are facing fewer job opportunities, lower pay for positions that are available, and the prospect of depleted savings, which could keep them at home, living with their parents for a while. For more on the pandemic's impact on young workers, join me on Friday at 7 p.m. Eastern for a Bloomberg Television special report, Generation Interrupted. And tune in tomorrow at the same time for part 5 of our Bloomberg Radio series. In New York, I'm Lisa Abramowitz, Bloomberg Radio.
All right, and do tune in tomorrow for part 5 and for Lisa's special that's beginning airing at 7 p.m. tomorrow night on Bloomberg Television. It is a really important issue, Carol, when it comes to the economic impact. I do wonder how much we'll see in the jobs report tomorrow when it comes to, different ages, different types of occupations, and some of the regional breakdown, because I feel like this is the point where we need to start getting into the weeds a little bit about where those jobs are going to be. We can't just say anymore, it's like, oh, it's up, it's down, whatever.
No, and Mike McKee got to that earlier, whether it's looking at what minorities are doing, younger people are doing. We want to understand those people who've dropped out of the workforce as a result of this, because that tells a much deeper story when it comes to our labor market. So that's going to be really important to understand. But I do think about this younger generation. I think I don't know, time will tell how quickly we can come back. Things like rapid COVID testing that we just talked about.
Thank you.
That is a game changer.
That's exactly where I was going to go next. Totally. I think you got to stitch them together. Yeah.
Oh my God. Like, it's a game. Like, if you think about that, and we keep talking about vaccine, very important. But man, the consequences of not having a safe vaccine on the market or a really effective one, that's going to have, that's going to impact our economy even longer. So if you could come up with rapid COVID, like, I would take a test every day.
Well, that's the thing. I mean, like, and I do keep coming back to this idea of, right now we're working on the honor system, right? Essentially, in the sense that if I'm going to our building, if I'm going to somebody else's building, which I've done one time in the course of the last few months, you have to fill out this survey. It's like, have you had a fever? No. Have you had any chills? Have you had it? It's like, check. But there's no real evidence. I mean, I tell the truth, but not everybody will, candidly. But if you get up, as we've joked about, but we're not really joking, you get up,
take a shower,
you have a glass of water, brush your teeth, spit in a cup or spit on something, put it in the app, read it, and then it sends a message to Bloomberg or whoever being like, yep, Carol's clear.
Yeah, absolutely.
Okay.
I mean,
I'll do that.
Right. And there's tricky, like, listen, it's so tricky because you may not have the virus even at that given moment, right? Like, there's no guarantees, right? Like, you could get on a train then, and then you do another test. Like, it's tricky, but I do think it would be a big move forward in terms of making people feel a lot more secure about going, especially into major cities where there's tons of people in small places.
Yeah, absolutely. So we will continue to track that and keep an eye out for Lisa's special. Coming up, we're going to take you to the drive to the close. In the meantime, let's get back to Nancy Lyons in D.C. Hey, Nance.
Hey, Jason. The American Medical Association is asking the Supreme Court to strike down a Trump administration rule that's had a far-reaching impact on the nation's family planning program. It prohibits clinics from referring women for abortions. The move by the nation's largest doctors group comes after 2 federal appeals courts split on the legality of the rule. The next debate on the national stage will be between Vice President Mike Pence and Senator Kamala Harris. They're set to face off next Wednesday in Salt Lake City. In an interview with Hillary Clinton for the former First Lady's podcast, You and Me Both, Harris discusses how the debate will be very different from any of her previous debates.
This time it will be about, requiring some level of knowledge, if not mastery, of Joe's record, the Vice President Mike Pence's record, Trump's record, and then, of course, defending my own record.
The Commission on Presidential Debates says it plans to adjust the format of the remaining matchups to reduce the number of interruptions. President Trump, though, suggests he will not accept new rules, tweeting today, quote, "Why would I allow the Debate Commission to change the rules for the second and third debates when I easily won last time?" As California fire crews continue to battle fires in the hills above Sonoma and Napa counties, another wind event is expected to make things worse. California Governor Gavin Newsom.
Another disaster scene here in our state. It's been a remarkable year, just shy of 4 million acres now burned.
The Glass Fire north of San Francisco has destroyed more than 140 homes and is threatening thousands more. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Jason Kelly, Carol Masser. The great shift, I feel like, is underway. And how big it's going to be, how long it's going to last, we don't know. But what we do know is people are moving out of certain cities and people aren't coming back to work in certain cities. And that is true in Manhattan. Natalie Wong has a really good story about office space.
Doesn't it kind of like blow your mind a little bit about how quickly this happens? Like, I mean, we've been home 6 months. I mean, and that's a long period of time, but I just feel like we've been... Almost 7. Okay. Okay, fair enough. But people have been like leaving Manhattan for a while now. They moved really quickly. So we've got a story, great story. Office space, flooding the market in Manhattan. Companies look to cut costs during the pandemic. Tenants put 2.5 million square feet up for sublease in the third quarter, more than double the space a year earlier, and the biggest quarterly increase since the end of 2008, when we know everything was falling apart.
That was called the financial crisis.
Yes, it was.
And that was when you basically had people saying, look, my company's out of business, or my financial firm has been dramatically reduced. I need less space. So it is kind of crazy to think about the long-term impacts of this, because yes, you can rent more space and it's not that hard to do, but you start making decisions, you close your office, your employees start to adjust. Either they're going to a smaller space, they're working from home part of the time, or you take some office space in the suburbs, or you take office space in a different city. These things tend to, the longer they go, the longer the more they're likely to stick.
Well, there's a couple of things, too. If the economy is not doing well, people are going to be like, this is great. I'll let my workers stay at home because it's one cost off my balance sheet.
Good point.
So you have that kind of going on. And it is also, we have to see whether or not how we work really changes for longer, whether or not this hybrid or working from home really sticks with us. So time will tell. But those are pretty troubling numbers, especially when they relate it back to the financial crisis.
And rents are going down as well because demand is off. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Big gains for big tech. The Dow is lower. S&P, NASDAQ, both advancing. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are choppy today. Well, like you said, NASDAQ outperforms. Dow's currently down 35 points. S&Ps are higher by 9. NASDAQ climbs by 1.2%. The U.S. 10-year yield at 0.67%. Gold is trading higher by 20. Transports fall 30 points. And among the main 11 S&P sectors, leaders to the upside, consumer discretionary, telecom, and real estate, while energy led to the downside. Leaders to the upside in the Dow, Walmart, Visa, and Boeing, while Chevron and Dow Inc. were under pressure. And after earnings, Bed Bath & Beyond soared as much as 36%, and Pepsi rose 1%. In other news, New York reported the most new virus cases since May. And wrapping things up, Smart Global reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK, on your Bloomberg. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it is time for the Drive to the Close. Happy to have with us Sam Dunlap, Chief Investment Officer of Public Strategies at Angel Oak Capital Advisors, looking after about $10 billion. Joining us on the phone from Atlanta, home of, as I mentioned to Ed Clegg a few minutes ago, our traffic guy, the victorious Atlanta Braves, moving on to the next round of the playoffs. Happy to see that. Happy to see them dispatch so easily of the Reds, a very good team. So, Sam, baseball notwithstanding, how you doing?
Great, Jason. Thanks. Yeah, go Braves. Appreciate the shout out to our hometown team.
I know. I feel pretty good about them right now, even though they play in the stadium with the dumbest name in America, Truist Field, or whatever they're calling it, which I just don't even get me started on that. But we're happy to see them move on, right?
They're a little unhappy with you right now.
Exactly. So, Sam, amid, baseball's great, sports are great. I know you're a University of Georgia guy, so go Dogs on that side as well. But the economy right now, I do wonder how you're feeling about it, because I feel like we're getting some mixed messages.
Yeah, the U.S. recovery is really been V-shaped, as you all know, and I've been highlighting throughout the day, really off the plunge that we saw in Q2. I think this V-shape is clearly, being led by areas like housing, which are definitely pointing to continued V-shape. But, that really comes on the heels, as we know and touched on, several times before, just the unimaginable amount of monetary and fiscal stimulus. I think as we look ahead for this type of pace to clearly continue, where I think some concerns that begin to emerge is just, or the concerns for continued V-shape rather, is a slowdown perhaps in the reopening or the pace of reopening that the broad U.S. has been following, a delay in the vaccine as well as just lack of additional stimulus, which has certainly gotten some headlines today with Pelosi on the show earlier. It seems to be that there is some hope, quote, but, all eyes on the additional fiscal stimulus from here.
How do investors, kind of make sense of what's going on in the economy versus what's going on in the real world and what's going on, I say economy, markets, and then what's going on kind of in the real world, where we see some people certainly benefiting and there are many that are not. How do you take that into account as an investment advisor? Because there are names like a Walmart that certainly play into the lower socioeconomic part of our economy. So I'm just curious.
Yeah, where we focus on fixed income, particularly in the structured credit space, we really had our eyes on areas like housing that has clearly been a big beneficiary, to your point, in this recovery. And that's frankly been driven by just this inordinate amount of fiscal and monetary stimulus, particularly the monetary side, but also just really benefiting from some of the overwhelming amount of demand that's been created on the heels of the virus, but a lot of demand that has been emerging really, frankly, throughout the post-global financial crisis period. But that's just been further fueled by the effects of the virus, but also the plunge that we've seen in rates here at the zero bound. And again, that's really a testament to the Fed and the initiatives to get the economy going. But there are some real bright spots and beneficiaries, to your point, and housing being really leading the charge there.
So, Sam, let's talk a little bit more about housing and some specific things and trends that we've been talking about a whole lot on this show, and you may have heard us talk about it, and I'm guessing you've been talking about it as well. And certainly a city like Atlanta right there in your backyard is an interesting testament to this. People moving out of the Northeast in some cases, certainly people moving out of the big city centers, a lot of demand in the suburbs. We see that sort of in data, but how does that translate into something that is ultimately investable or something that an investor can factor in to his or her portfolio?
Yeah, it's a great question. As far as, again, where we focus on the fixed income side, I'll certainly touch on that. But to your point, I think it's worth noting and really, frankly, kind of honing in on some of the data, which is just, it has been extraordinary, coming out of the COVID crisis. Single unit housing starts up 12% year over year, existing home sales up 10% year over year, new home sales, which is just an incredible number. I had to recheck it, getting ready for this call, up 43% year over year. That's the fastest pace since 2006. Pending home sales up 21%. So that hit a new record on a year-over-year basis yesterday. So it's truly remarkable what we're seeing on the housing front, but also just what it's done to confidence, just home builder confidence. It's at the highest on record rather, at 83 currently. So, the pace or continued pace of this housing surge, if you will, continues. So, home builders have clearly been a beneficiary of that on the equity side. And but we as fixed income investors really been looking at areas and continue to focus on areas of non-agency mortgage-backed securities. So securities not backed by, the GSEs or Uncle Sam, if you will, from a principal protection perspective. So taking credit risk, what we view as very high-quality credit risk in the non-agency RMBS subsectors where you can get very high loss-adjusted yields on a relative basis, but also have a whole host of credit protection, in our opinion, just due to the momentum that we're seeing in home prices, but also in prepayment activity due to low mortgage rates.
All right, we're going to leave it there. Thank you so much for spending some time with us. Really appreciate it. Sam Dunlap, Chief Investment Officer of Public Strategies down at Angel Oak Capital Advisors in the ATL. And good to catch up with him. And especially, the housing market, I feel like, Carol, it's playing a different role in this crisis, right? It was at the core of the last crisis, and now it's a funny little indicator in some ways of where we are.
Well, I'm just go back to our conversation with Ali Wolf earlier in the week, and you can catch that on our weekend show coming up and also on our podcast feed. I mean, if you look at housing stocks, they're up 35% so far this year. I mean, I know we just talked about it with Sam, but but what Ali said is you get some good data points and you get some really bad ones. And how do you make sense of it? What picture does that tell us about the economy, kind of the overall health of the economy?
Well, and I think you have to look at, where the housing activity is, who's involved in it, right? I'm guessing it's not the lower end housing. It is higher end. It's the affluent, the top of that K, who are mobile.
Right. Somebody's got a job, knows that they're going to have a job, and so that they can take out a mortgage, and the bank is going to bet on them. That's what it comes down to. All right, you're listening to Bloomberg Business Week on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. An update on Wall Street with the Dow, the S&P, and NASDAQ all advancing. Let's get right to the numbers. I'll give you the reason why in a moment. S&P up 18, a gain of 0.6%. The Dow up 36 points, higher by 0.1%. NASDAQ up 159 points, up 1.4%. Rally in technology today. The NASDAQ 100 index up 1.4%. Some of the tech names advancing include Amazon up 2.3%, Apple up 0.9%, Tesla up 4.5%, Facebook advancing today by 1.8%. Stocks moved higher, led by gains in the biggest tech firms as investors weighed the chances Democratic lawmakers and the White House will reach a deal for a fiscal stimulus package. Oil tumbled on concern the market might be oversupplied. West Texas Intermediate crude down 3.9%, 38.67 a barrel. Gold up 1%, 19.04 the ounce, and the 10-year yield 0.67%. So it was an up day on Wall Street. Sam Dunlap is Chief Investment Officer of Public Strategies at Angel Oak Capital Advisors. And moments ago, right here on Bloomberg Business Week, he talked with us about the shape of the recovery.
As we look ahead for this type of pace to clearly continue, where I think some concerns have begun to emerge is just, or the concerns for continued V-shape rather is a slowdown perhaps in the reopening or the pace of reopening that the broad U.S. has been following, a delay in the vaccine as well as just lack of additional stimulus, which has certainly gotten some headlines today with Pelosi on the show earlier.
Bed Bath & Beyond shares soared to the highest in more than 2 years after the home goods chain posted a surprise gain in quarterly sales, a sign that investors believe that turnaround efforts are paying off ahead of the holiday season. Bed Bath & Beyond today going way beyond, up 25.1%. Also surging today, shares of Crocs up 5.8%. Justin Bieber on Instagram wearing Crocs. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaken, not still.
With Carol Masser and Jason Kelly on Bloomberg Radio.
Yes, indeed. Time to take a look at the trade. Jason Kelly, Carol Masser, also Bloomberg News cross-asset reporter Sarah Ponzek with us to talk about it. And I'm pulling up some of my numbers here, but we really bounced around a lot. Charlie giving us those closing numbers. So we finished off our highs and lows of the day, but we did post some gains. S&P 500, 280 names in the index posting gains, 219 lower. We had 6 unchanged. Major industry groups, Jason, real estate, consumer discretionary, top of the pack. Bottom of the pack, there were 4 out of those 11 industry groups in the S&P, major industry groups in the S&P that were lower today. Bottom of the pack, energy. Man, that bounces around a lot. We know it's been beaten up big time, too. It was down more than 3%.
Yeah, it was such an interesting trade to watch for sure. And so, Sarah, what did you make of it? I know you were all over the place today, including taping this week's podcast, which you're going to have to give us a preview of. But before you do that, what's the texture of this trade?
Right, what goes up, we'll have to check it out. I'll give you a preview. But
yeah, I like it.
We
You're
did
good at selling this thing. I
yeah,
like it. I like
we have
it.
to
Proud
work
of
on
you.
it. So we did bounce around a lot, and not just in the stock market, in the bond market as well. At one point, you look at 10-year Treasury yields close to 72 basis points, and then we ended around 67 basis points or so. So investors really are still watching the ongoing discussions surrounding a possible fiscal 4 package. Hopes still do remain pretty low, at least from conversations when I speak with investors and from reports that I get over email. However, Mnuchin did propose that $1.6 trillion compromise proposal, and that included more state and local aid, also $400 a week in unemployment insurance. So there is this sense that maybe the two sides will come together, and it is. We discussed this yesterday. Every time we get a headline, we see markets jolt one which way. However, I will say what really did stand out today, and that was a trend the entire day, was the outperformance of technology. The NASDAQ ending up 1.5% today, the 7th day in the green out of 9. I mean, a pretty sturdy gain, and you see those FANG names just returning to lead the show.
Did you see the number 1 gainer, though, in the S&P 500?
The number 1 gainer? Etsy.
Etsy. I have to say, I have actually ordered more from Etsy than I have in a long time.
Like pandemic?
Yeah.
You decorating?
No, I'm not decorating, but like,
Gifts for people?
yeah, and things like that, Is it funny?
Is it like you putting your face on things and then like sending them out, or like what are you doing?
Yes, I've started the T-shirt company, Jason.
I thought you might,
It's
but
happened.
I think you're doing it without me, and I think they're just like
No.
Carol Master T-shirts.
No, I'm not going to do that.
When
Who wants that, Sarah?
when I first moved to New York City, I must say I did get some decorations off of Etsy.
Did you?
I
And
did.
right? It's like it's I
fun.
have to say, you go to that website. That's another place you go down a rabbit hole. Like I'm gone for
yes.
hours, and it's
But that stock has been
it's up 197% this year.
But it's been a wild ride up to this point. Like it had a few rough years right after it went public. Remember that? I mean, it's
been on quite a tear.
It has, especially this year. And I'm looking at the top performers on a percent basis in the S&P right now. To name you a few, Etsy, Under Armour, Netflix, then DXC Technology, Under Armour, both shares, and then Twitter and Gap. So you have this mixture of you have Netflix and Twitter on one side,
The
internet
stay-at-homes.
companies, stay-at-home stocks, and then on the other side you have some of these retail names. I mean, Gap, Under Armour in there, for example. So you have this interesting dichotomy playing out.
Say the retailer that I so love to talk about.
Here we go.
Do you know what it is, Sarah?
Which is it?
Wait, you actually...
Oh, I know. Bed Bath & Beyond. It must be. And what a day we had, right?
Well, talk to us first of all, then we can get into my
Talk
little
about
rant
a stock
it.
that's been a mess.
Oh my God.
Well, what's so interesting to me, honestly, just about the price action today. So Bed Bath & Beyond shares ending up 25%. That is just the best day since March 24th. So not even the best day of the year, considering how beaten up it was earlier in the year, too.
But it's still up only 8% this year, which is just showing you how much it's been, smacked around.
Right. Well, you look at the expectations going into this earnings report. So analysts had expected a decline of 1.3% for comparable same-store sales. However, that number rose 6%. So that is a pretty hefty gap to miss on. So it shows how just downtrodden analysts and investors have been on this name.
Well, no one is more down on this as a retail concept than Carol Master. I mean, it just like brings out the...
Because you walk in there, and first of all, like it's like anything you want to buy, like if you're going on a trip, right? There's all those little samples. And then you've got to find your way. It's like you need to leave a breadcrumb trail because you've got to walk through every department. My God, if you forget something and you've got to go back. And I also just feel like you only go there in an emergency. Like it's never really I don't know. I don't shop there.
It is a maze. I will completely agree with you on that. And I'll say for anyone listening who is not in a big city like New York City, in the New York City stores, in many stores here, you have an escalator that takes your cart down. And when I first moved here, I thought it was the most unbelievable thing, but it also meant that I got lost more often.
And then you like accidentally pick up somebody else's cart, and they're like, "Hey, that's my French toast press."
You especially can't be doing that during COVID. So I hope you're not taking anyone's cart.
Full transparency, before Bed Bath & Beyond calls me and calls me all these names and gives me prank phone calls, I actually have shopped there recently. So
Carol.
I know.
Pandemic Carol is really a different Carol, isn't she?
You're learning a lot about each other, aren't you?
Yes.
We always do. We always do.
So true.
And so, Sarah, before we let you go, I mean, the opposite in some ways of Bed Bath & Beyond is Amazon. And we can't get too far away from this, right?
We really cannot. So Amazon got a new street high price target from Pivotal today, $4,500. So we saw Amazon shares up 2.3% to $3,221. So obviously another gain of more than $1,000 per share would be a very, very strong increase. But people just continue to believe in the Amazon story. They're putting their foot in so many different areas of the economy.
It's the Peter Lynch concept because, sure, why not? All of us use Amazon, whether it's to shop, whether it's to stream, whether it's, you name it. It's hard, you kind of get what the investment story is here.
All right, Sarah Ponzak, we did not leave you enough time to tease your podcast. You got to do that tomorrow. Give us a robust tease tomorrow for what goes up.
It doesn't come out till tomorrow afternoon, so tomorrow still works.
There you go.
Perfect.
It's perfect. It's still in production.
Thank
All right,
you for
Sarah
letting me
Ponzak,
rant.
cross-asset reporter and not a BBBY hater like Carol Master. Let's get out to Ed Baxter in San Francisco. Hey, Ed.
Hello, Jason. New York State reporting the most one-day new cases of COVID-19 since May. Governor Andrew Cuomo says centered in the areas we've been reporting to you.
The overall hotspots have gone from 5.5 to 6.5. That's up a point. And we've seen growth in Brooklyn and a little bit in Rockland.
Yeah, positivity overall at 1.27%. And all of us know the head, as we head into the flu season combined with COVID, Dr. Anthony Fauci says we need to be careful.
Get vaccinated. Take everyday preventive actions to stop the spread of germs.
And he says take responsibility for your own health as well as protecting others with your careful behavior. New Jersey Governor Phil Murphy has signed the so-called millionaire's tax bill, and on Bloomberg's Balance of Power says it's about working people.
New Jersey is the state to raise a family. We want to keep it that way. We're also a quintessential middle-class state, and asking the wealthiest among us to help us make those investments is good for the middle class.
He also says a big jolt of state aid is needed as election officials try to figure out how to create a better discourse for the upcoming presidential elections. White House spokeswoman Kayleigh McEnany seems to suggest an interesting proposals that Democrats dump Joe Biden.
The president made clear his view on that yesterday, that he thinks the only way there's a fair debate is change in the moderator and a change in the Democrat nominee.
Well, House Speaker Nancy Pelosi here on Bloomberg's Balance of Power says Mr. Biden shouldn't ever appear again.
People say, well, they should have had a button that turned one microphone off while the other person was speaking. Whatever it is, I think one and done.
He says the president doesn't know how to act, so why bother? In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser, Bieber Fever. I don't own Crocs, and I probably never will. Not quite sure I can pull them off. Other grown men can, or think that they can. I don't know how you feel about Crocs, but I
I've
did
never
not
had
see
Crocs
this coming.
either. Aggie had Crocs.
Yeah.
Does
I mean,
Alice have Crocs?
Alice has adorable little Crocs. She's 2.5 years old. Just to point out. Did I ever tell you that was how Jen told me that Alice was a girl?
Give you pink Crocs?
She gave me little, like the smallest little pink Crocs. That was how I found out that Alice was an Alice.
That is the sweetest thing.
Yeah,
That's
I still have them. We were going to give them away. I was like, nope, give them to me. Yeah.
Oh my God, I'm sentimental about that kind of stuff. So what's interesting though is I feel like brands, especially ones that maybe aren't so cool anymore, they often look to a celebrity or something to kind of give them a little bit of a kick. And so shares of Crocs did rally after an Instagram photo from Justin Bieber suggested he will collaborate with the company on a pair of its distinctive footwear soon. He said in his social media post.
I would love to go back to the Justin Bieber of 10 years ago and be like, hey, bro, while you're getting in trouble with all your melees and everything like that, you're going to endorse Crocs. And he would probably punch you in the nose.
But did you see what he tweeted on Instagram? It's like a photo. It's a pool.
I don't think you tweet on Instagram. But
sorry, Instagram. So there's a photo. Yeah, you're right. See, I'm sorry, I don't do Instagram. So there's a photo of a pool, and there's a pair of Crocs floating.
Yeah, they are very convenient for that. They do float. I mean, listen, all my boys have worn Crocs. My teenagers still can get away with wearing them around sort of like clog style. I just can't quite do it.
Yeah, I could see that. All right. Well, the stock moved. I was just looking for the final close here.
It ended up 6%, almost 6%.
Okay, so
closing
not
at
too bad.
$45 a share. Anyway,
Not going to find Crocs. You'll find T-shirts on Jason Kelly, but not a pair of Crocs.
A pair of Crocs. More ahead. It's Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks higher after a choppy session. Technology shares were the standouts today. The Dow, the S&P, NASDAQ all advancing. S&P up 17 with a gain of 0.5%. The Dow up 35, up 0.1%. NASDAQ up 159, up by 1.4%. 10-year up 2/30 seconds with a yield of 0.67%. Gold up 1%, 19.04 the ounce. West Texas Intermediate crude drop there, down 3.9%, 38.65 a barrel. Stocks moved higher, led by gains in the biggest tech names as investors weighed the chances Democratic lawmakers and the White House will reach a deal for a fiscal stimulus package. Also, of course, we've got the jobs report tomorrow morning, 8:30 a.m. Wall Street time. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, earlier today, House Speaker Nancy Pelosi caught up with our own David Weston. She is in the midst, of course, of these on-again, off-again negotiations around Fiscal 4, as Sarah Ponczek rightly called it earlier. Here's what she had to tell Mr. Weston.
We've come down very far in the negotiations, not abandoning any priorities, but shortening the timetable and putting some things off to the appropriations. You know, 4.5 months since we introduced the HEROES Act, or 3.5 months until we're sworn in as a new Congress, and less than 4 months until we inaugurate the President of the United States. So the horizon, and we're approaching that horizon, and hopefully in doing so we can be well prepared by coming to agreement now on this legislation.
So let's get more. Of course, that's Speaker Pelosi speaking earlier to our Bloomberg's David Weston. Let's get more, though, on where we are because, man, investors definitely watch it. You can see it in the trade. Eric Lawson, right, is with us, Bloomberg congressional team leader on the phone from Washington, D.C. Eric, good to have you here. So where are we? Because investors are really watching this very, very closely.
Well, you know, after Pelosi was on Bloomberg Television, she at 1 o'clock talked to Treasury Secretary Mnuchin for 50 minutes on a phone call. They did not resolve all their differences, but they're going to continue talking. As that's going on, the House is going to move tonight around 7 p.m. to vote on a Democratic-only plan. This is $2.2 trillion. We're expecting really no Republicans to go for this. Republicans are pretty convinced it's a show vote. It's being designed just to provide political cover to Democrats, so that if they do have to go home without a deal, they can say at least they tried. You know, and at that point, the question remains, you know, can Pelosi and Mnuchin seal a deal? The House is scheduled to leave town tomorrow on Friday for a month-long break as they go home to campaign ahead of the November 3rd elections. But they could be called back to vote on any deal. So we're expecting, you know, not necessarily a complete collapse today, but things are still very far apart. You know, Mnuchin yesterday came up with a $1.6 trillion offer. It's much closer to what the Democrats are demanding than anything the White House has ever put forward before. Initially, the White House was around $1 trillion, so they've come up $600 billion. They're now offering $250 billion for state and local aid. Democrats initially wanted nearly $1 trillion for state and local governments. They came down to about 450. So the gaps are narrowing, but there still is a gap. And the way the pace is going, given the time frame, it's going very slowly compared to the time frame for the House to come out. So we're you know, they're expected to talk again today, but there's significant differences. And even if they get a framework, let's say they get these big numbers nailed down, there's a lot of drafting to go on. So I'm not expecting the House to be able to really vote on this this week. It would be maybe next week or even the week after. By the time they write this, dot all the I's and cross all the T's and have it all worked out. You know, there's a lot of issues. For example, if you talk about testing, there was a scandal there where the Pentagon was spending testing money on war equipment. You know, Democrats want to have some limitations on that kind of thing. These huge bills just have so many little mini disputes that even if Mnuchin and Pelosi came out today and said, you know, they have basically an understanding, it's going to take a while before Congress can enact that, before the stimulus checks can go out. You know, they're pretty much on agreement that people are going to get $1,200, but, you know, they have to pass the bill first.
I think there was some concerns, too, that the Supreme Court, you know, nomination process was also going to get in the way. Is that part of it? Is that, you know, how does that fit in, or does it not at all?
Well, you know, the interesting thing is the meetings before had Mark Meadows and Chuck Schumer in them as well.
both of those players are now involved in the Supreme Court battle. They're over on the Senate side of the Capitol, where I'm speaking from, and dealing and locked in a no-holds-barred battle over Amy Coney Barrett's nomination. So that's leaving Pelosi and Mnuchin alone. And actually, that might actually help the talks a little bit. These two have made deals before on the debt ceiling, on government shutdowns. But again, how much leeway do they have? Ultimately, we are understanding that the president has said to Mnuchin, take that number up, I want a deal. If you look at his poll numbers, he's not won over the moderates, the independents that he needs to repeat his election victory. A deal announcement could really potentially help him. But the Republicans in the Senate do not want to see a number of $2 trillion or more. That's really a red line for them. They cannot vote for that. So we're still on this stalemate right now.
Yeah, it's interesting. I'm so glad you brought up Mark Meadows because, I mean, he was seen as sort of like Dr. No in all of these negotiations, and yet we know that he in many ways speaks for the president, and that Mnuchin, in part because of his success in negotiating with House Speaker Pelosi, sometimes has been seen with a little bit of a gimlet eye by some of his colleagues in the administration. So it feels like they, this mix of the players has changed. So what's the next big moment here, Eric?
Well, but there's going to be another phone call, I believe, today between Pelosi and Mnuchin. We don't have exact timing on that. We're obviously, pestering our sources to the point they can't stand us anymore to find out when it's going to be and what happens, lurking outside their offices. But we expect some further conversations here, and every time the readouts come out, we look through the tea leaves to see if there's any real progress. Right. So I think we're going to look at that, and we're going to look at this House vote tonight. Again, the House vote is really a sideshow in many ways.
It seems like, yeah.
Interesting. But it does potentially. It's slightly a bad sign for a deal because it does then, once that's accomplished, politically, the House Rank and File could go home and just say we tried.
Yeah, we did it. Yeah,
you would just think before the elections, everybody would want to get something done.
Not in 2020, Carol. That's ridiculous. Come on. It's 2020. Everything's upside down. All right, Eric Wasson, thank you so much. Great context. Up to the minute, which is exactly what we were looking for. We really appreciate it. Covering all things Congress with his team for Bloomberg. Joining us on the phone from the Capitol, Carol.
Yeah, and for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you are listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli is coming up next. Certainly a lot to continue to talk about in terms of what's coming out of Washington or not when it comes to future stimulus. All right, coming up, though, we're going to hear a little bit more about the global economy with the head of the IMF, and then a little bit later on, we're going to talk about food with the CFO at Impossible Foods. That's coming up.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we are going to hear a preview of David Rubenstein's latest show. It is an interview with the relatively new managing director of the IMF.
Yeah, listen, and she's got such a great global view of the economy. So we're going to get into that in just a moment. All right, first up, back to your top business stories and some of the news after the closing bell. Hey, Charlie Keller.
Well, hello there, and here's what's going on. Stocks climb, led by big tech today. NASDAQ 100 index at the highest in almost a month. Amazon, Microsoft, and Tesla all advanced today. We did see the Dow, the S&P, and NASDAQ all advancing as well. It was a volatile session, those stocks swinging between gains and losses. The S&P ending the day with a 17-point gain, up by 0.5%. The Dow up 35, up 0.1%. NASDAQ up 159, up today by 1.4%. Among some of the tech names that did advance today, Apple up 0.9%, Microsoft up by 1%, Zoom up 2.7%, Tesla up 4.5%, and shares of Facebook up today by 1.8%. Stocks advance, as I mentioned, technology leading the way higher. Investors weighing the chances Democratic lawmakers and the White House will reach a deal for a fiscal stimulus package. Wall Street, of course, looking ahead to tomorrow morning's jobs report. Megan Green is senior fellow at the Kennedy School, and on Bloomberg television this morning, she said the numbers won't be as good as they were.
I think a lot of the stimulus programs that were put in place are continuing to help people because a lot of businesses just hoarded away cash and they're running that down. So I think that will still be reflected in tomorrow's jobs report. But I think, it should start to show through. So I said it would be buoyant. That means there won't be a collapse, but I think it will look less, the labor market will look less good in September than it did in August and July even.
As you know, the number breaks at 8:30 a.m. Wall Street time. Our coverage begins ahead of that. And, of course, complete analysis, as you've come to expect over the years, from Bloomberg Radio and Television. American Airlines Group and United Airlines Holdings will start laying off thousands of employees as scheduled, spurning Treasury Secretary Steven Mnuchin's appeal for a delay as he negotiates with Congress over an economic relief plan that includes payroll support for U.S. carriers. Among some of the airline stocks today, the four biggest in the U.S., UAL up 1.2%, American Airlines Group up 2.4%, Delta up 1.7%, Southwest up by 1.1%. Recapping, S&P up 17, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this preview of the David Rubenstein Peer-to-Peer Show, it's brought to you by Wells Fargo Commercial Banking, helping customers chart the way ahead in uncertain times. Carol?
So, Jason, if you want to know what the global economy looks like, then you definitely want to hear from this next guest. IMF Managing Director Kristalina Georgieva recently sat down with David Rubenstein for an episode of the David Rubenstein Show, peer-to-peer conversation. In this little clip, she talks about successfully working from home and why the world needs to come together to create massive global stimulus.
As we talk today at the IMF headquarters, it's relatively quiet here. That's because of the pandemic. People are working remotely. Are you generally working remotely?
So on March 13th, we took a decision to work remotely. And we have sustained this decision because conditions are still such that for the safety of staff, we ought to continue to respect that modality of work. It has been amazingly successful. We are doing much more because of the crisis, and we are doing it working remotely. But it does have some downsides. But David, we would never go back to where we were. We would never have 100% of people sitting here in these offices. We now know that we can be very productive working from home. And we would be striving to have maybe 50-50, 60-40 at any one day being in telecommute, working from home.
What are the economists here telling you about the state of the economy in the world? Because of the pandemic, are we likely to have a kind of global recession for another year or so?
We have some optimism on two grounds. The first one is exceptionally decisive action by central banks and by finance authorities. They put a floor under the world economy. We, on our side, have done our part for the countries that have no resources on their own. The second reason we are somewhat more optimistic today than we were a couple of months ago is that we see the world learning how to function with the pandemic still with us. But make no mistake, the recovery is partial and it is uneven. We are not going to see in 2021 return to pre-COVID conditions, and we are seeing big divergence, parts of the economy doing really well and parts falling behind. And this is my biggest concern, that we may come on the other side of this crisis with more inequality, higher debt, higher deficits, and a climate crisis still hanging on us. If we are strong as a world, we ought to come together. A massive coordinated stimulus can make it so that we have a better economy on the other side than we had in 2019.
And that is part of the conversation in the next episode, the upcoming episode of the David Rubenstein Show, Peer-to-Peer Conversations, a conversation with IMF Managing Director Kristalina Georgieva, sitting down with David there at IMF headquarters, both of their current hometowns, the nation's capital. Interesting to hear her say, we're never going back all the way.
Yeah, that's kind of interesting.
I mean,
yeah.
very strongly. Basically, almost like, that's a ridiculous question, Dave. was the way she essentially said, she's like, why would we do that?
Yeah. Listen, and think about some of the heads, whether it's Siemens USA, whether it's Aaron Kennan that we talked to.
Yeah.
You know, people are thinking, okay, wait a minute, this is working. We're productive. We're getting things done. And if this provides some greater flexibility for workers, why not? Why wouldn't you do it?
Yeah, exactly.
I do wonder, Jason, right? Like, I mean, you and I have talked about this a lot. Whether we're gonna look back at this time, terrible as it is, no doubt about it, and certainly for the loss of lives. But so many things might change in our world, especially when it comes to working.
Yeah, I think that's right. Working, living, so many things. So catch the entirety of that conversation tonight at 10 p.m. Wall Street time and throughout the weekend on Bloomberg Radio, the David Rubenstein Show, peer-to-peer conversations. Love his interview style because people just tell him stuff.
They do tell him stuff. I also do wonder when we look back whether it's like women who run institutions and organizations, whether they are quicker to say, yep, work from home versus men. I do wonder like what kind of research and data points will come out of this as well.
I'm sure somebody will study that. All right, let's get back to Ed Baxter. He's in San Francisco with world and national headlines. Hey, Ed.
All right, thank you, Jason. Denise Pellegrini and I, by the way, on the weekend edition of Bloomberg Best, you're going to feature that interview as well, so you have lots of options to catch it. Pelosi Mnuchin phone call has not yielded a relief stimulus bill. Clarifications, but no key issue consensus. This is New Jersey Governor Phil Murphy on Bloomberg Balance of Powers, urgently calling for some state aid.
We need a deal. We need a deal before January, and that has to include state aid. Obviously, extending unemployment, help for small businesses, but we need a big jolt of state aid.
And he says Pelosi and Mnuchin are both bright and can get it done. Firefighters here in California's wine country have been feverishly racing against time later today when very hot temperatures and high winds are expected. Governor Gavin Newsom says there is not much containment.
We continue to be immediately focused on suppression strategies, particularly here at the Glass Fire. 2,100 firefighters are working this fire exclusively.
And here in the San Francisco Bay Area, air has gotten very, very bad again today. PG&E also is threatening rolling blackouts again because of the heat. New York reporting a sharp spike in statewide cases, the most since May, driven by zip codes in Brooklyn and in Rockland County. And Dr. Anthony Fauci says if people don't start taking care of their own personal behavior and have concern about others, it will be a very bad flu COVID season.
It's our personal responsibility to protect ourselves, but we also have a responsibility to protect the vulnerables around us. Very similar to the situation that we see with the current challenge of COVID.
This is Bloomberg.
All right, Ed, thanks so much. Well, picking up on what we were just talking about, Carol, in terms of the nature of work going forward, I'm not sure this will persist, but hey, who's to say? I love this story by Olivia Rockman. It's one of the most read on the Bloomberg today. I actually saw it on the web because there's some great pictures that go along with it. It's a nice read. Remote work is letting people take epic road trips during COVID. There are a bunch of like selfies that people took and shared with Olivia and our editors about this because it's basically like, look, I can work from anywhere, and the anywhere can be different day to day as I'm roaming around the country.
Right, exactly. Because, you know, if you're still working, but you can kind of do it anywhere, why not then move around the country, you know, during that process? And you're right, there's some great pictures and, you know, people like hitting the road. That's exactly giving up their lease and basically hitting the road and then finding places that, you know, as they travel around, finding places that are open that they can kind of check out and tour.
Right, exactly. I mean, I think we are, and I shouldn't say we, I certainly living in sort of this bubble that we're living in, it's like, well, you can't go do that. That's closed. Can't go to that place. Can't go to that place. The fact of the matter is that in different parts of the country, this is not a judgment. This is a fact. Stuff's open. You know, you can go see it.
Totally.
You know, you can go take a tour of a state capitol. Yeah, exactly.
Or a mortgage or some other things. Like, I bet younger people are saying, okay, let's go.
Yeah, exactly. I'm going to give up my lease on my apartment, and we know that apartments are going to be available in New York City. There are already a lot of them, so you can come back, maybe move into a different place, and hit the road.
Yeah, exactly.
Everybody always says, I would love to drive cross-country. It's like, all right, we'll do it.
I would love to do it. I mean, it would be tough to do a radio show. Or not. Maybe it would be like, hey, where are you today? Where in the world is Carol?
Where in the world is Carol? She's at the Motel 6 in Slidell, Louisiana, folks.
And there's nothing wrong with that.
There's nothing wrong with that. I've stayed at, that is a very deep-cut shout-out to Dennis Kelly, who once took us to the Motel 6 in Slidell, Louisiana. And let me tell you, we were not happy about it.
Oh, really?
This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Update, a volatile session. Those stocks pushed around by the latest developments in efforts to forge a stimulus bill acceptable to Democrats and Republicans. Stocks were led higher by the biggest tech names today. The Dow, the S&P, and NASDAQ all advanced. S&P 500 index did advance today. We saw the S&P up by 17 points, a gain of 0.5%. The Dow up 35, up 0.1%. NASDAQ up 159, up 1.4%. 10-year up 2/32, 10-year yield 0.67%. Gold up 1.1%, up $20 the ounce, now at $19.06. Crude tumbled 3.9%, down $1.55 a barrel. West Texas Intermediate crude 38.66. Recapping, S&P up 17, up 0.5. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, really excited to catch up with David Lee. He is the CFO of Impossible Foods, joining us on the phone from San Mateo, California. And we certainly want to get an update on what's going on at Impossible Foods as so many of us continue to explore that world of alternatives when it comes to meat. But one of the main things where we want to start is around App Harvest, because it fits into so many of the key themes of 2020, not the least of which, Carol, is blank check companies, special purpose acquisition companies, SPACs, as we know them. App Harvest, he's a board member, David Lee is. David, really nice to have you back with us.
Oh, it's great to be with you, Jason and Carol, and I'm excited to talk about more than just Impossible Foods. Now we have this great news about App Harvest.
Yeah, so tell us about this company, and we can get into all the popularity of SPACs and whatnot in a minute, but, I mean, you've got quite a group of people involved in this. First of all, what's the company about?
Well, App Harvest is, I think, going to revolutionize the way in which we make vegetables and tomatoes for the better. They're also creating a renaissance in the heart of Central Appalachia. This is an incredible company, and ever since my days long ago when I was running the food business at Del Monte, I was waiting for a company like App Harvest to emerge, because they're not only going to create sustainable produce, but they're going to create a sustainable economic change in the heart of coal mining country in Kentucky.
Yeah, it's really cool. I mean, you guys are doing amazing things. You're supposed to build, I think, the world's largest greenhouse in Kentucky. Tell us a little bit more about how you're doing it, how you're going about, and really the impact you're hoping to have with all of this.
Well, Jonathan Webb and the management team at App Harvest have assembled some of the most experienced future indoor farmers. You know, these are folks who recognize that so much of the produce that we consume here is largely exported from outside the country, oftentimes is laden down with a tremendous amount of chemicals. Whereas their chemical-free product, while it'll be cost-competitive, it'll be grown right in Central Appalachia, and we think it has a good chance of being of a higher quality, something that we know consumers are looking for. And, you know, with fellow board members like Martha Stewart and Jeff Ubben and others, I think it's not just the management team. I think this board is fully supportive of the revolutionary change that Jonathan seeks to lead.
Well, and David, and you understand this better than most with your work at Impossible Foods. I mean, part of this is, you know, sort of putting some of the latest and greatest science against the development and, as you say, the supply chain. So what's underneath this? How does it get to the point where you can produce these better, sort of better for you products and better for you in part because of the ultimate simplicity and the lack of all that bad stuff that unfortunately we're much more aware of right now?
Well, one of the great things about App Harvest is they certainly are using technology for the better. I mean, we believe the company will only use 10% of the water normally used in outdoor growing and perhaps even grow 30 times the number of tomatoes in the same space. But what's interesting is they are open to the best of breed technology that's available off the shelf today. They're really integrating in a brilliant system technology from throughout the world so that they don't have to wait for their own proprietary engineering to begin to open this incredible indoor farm and ship product soon, in actually the upcoming year.
I think it's pretty amazing. I mean, do you ultimately see this, David, as someone who understands food and alternatives to the existing systems that are in place, that we can scale this up as a nation and maybe, and as a world?
I believe that it's not only possible, I think it's critical. The way in which we make all the produce that we consume is not sustainable. And many, including the United Nations, have estimated that we have to rapidly improve the productivity of our farms in order to meet the global need. AppHarvest is doing it by creating its own controlled climate right in the heart of Kentucky, and they're doing it with technology that's available today. They're not waiting to solve this problem, and that's why I'm so excited to join their board and try to help as much as I can.
So, David, talk to us about sort of the process of going about getting involved in this, because we're all, I think, fascinated, especially, those of us in the financial world and adjacent, about this whole sort of SPAC craze and the blank check companies and this method of funding that has all of a sudden become all the rage on Wall Street. Give us the backstory, if you can, in terms of how you got involved and how you assess an opportunity like this.
Well, AppHarvest has had, long before this most recent announcement, some great early investors. Investors that included Steve Case and James Murdoch, Jeff Ubben, among others. I got to know the company actually through one of those investors, Jeff Ubben, who has created a new firm called Inclusive Capital. He had been the founder and CEO of ValueAct.
Yep.
I met Jeff over the years and known him to be a world-class investor who was really seeking to invest in missions and companies that can make the world a better place. And given my background running the food business at Del Monte for a time and my time at Impossible Foods, I think Jeff and I both felt that I might be able to contribute as a board member to really help Jonathan's team. And that's how it began. I think all of it includes, obviously, the most recent news that we're here talking about, this merger with Novus. But it really was well prior to the announcement of today that I was interested in helping Jonathan, because of the mission and need that he's seeking to fulfill.
Well, okay. So, and I do wonder, the food industry, David, better than most, the existing one is formidable. So how do we make sure that we do, like you said, it's critical in terms of figuring out a sustainable way of producing the agriculture that we need to really feed our country and feed society. So what's necessary? Does the government need to have a more active role in all of this? How do you see it?
Well, my own view is that capitalism can do great work, that great companies like AppHarvest need to stand on their own 2 feet financially, deliver to sophisticated investors on the same terms that any other great investment would, but have the positive externality, the benefit in addition to that of delivering against the mission. And what I really appreciate about Jonathan and the team at AppHarvest is they're doing just that. They're being recognized by some of the most sophisticated large institutional investors, including Fidelity and Inclusive Capital, Novus Capital, that they're an investment that is going to be worth a tremendous return. But at the same time, they're dedicating their company to a mission to make the world better. And I think that's the right combination of altruistic intent, but hardcore financial rigor that is required for us to make a positive change in food.
All right, we're going to leave it there. Thank you so much. Good to catch up with you, as you said, on something a little bit different, but clearly adjacent to your day job there as CFO of Impossible Foods. David Lee joining us on the phone from San Mateo, California, a board member of the newly public AppHarvest. And interesting to see what's going on, or soon to be public, I should say.
Well, and I feel like companies like Whole Foods and Chipotle, they were trying to get to this for years too, and I think it's great to see a company like this and let investors get involved to really
quite a board too.
Yeah, totally. This is Bloomberg.